markets deal with a pace of growth that was so abnormally strong and is now slowing to something that looks more historically normal?
People, they don't like inflation. This is true, but they will tolerate it.
The fundamentals for most companies have been quite good, but the fundamentals for the reinflation trade have been even better. So everything has risen.
I think the risk of policy error is rising quite high.
Transitory gives the impression of over and done very quickly. I don't think that's what we'll see.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down about 36 on the S&P 500 stateside. Our attention this morning very much on Europe with a 10-year in Germany inching back towards zero and an Italian 10-year climbing for a seventh straight day. That's yields higher, Tom. BTP's lower.
Yeah, John, it's really a subtle move. We had foreign exchange yesterday as dominant. I agree with you. The yield space is tangible, and you see it within Germany. What I would note, John, is I did this 14, 15 months ago and got yelled at. They didn't want me to have a mask on TV, so I'm going to put the mask on right now.
Okay.
And announce, John, that everyone in New York City is dealing with when do you take this thing off?
So you've put it on to take it back off again?
I put it on.
Just to demonstrate. Thank you for that.
We're living with this.
Welcome to the theater.
Super helpful.
On radio, it works great, but I just put the mask on radio. Look at that headline. European Union finds agreement for fully vaccinated travelers. That's linked directly into the markets,
That's
John.
according to AFP this morning, Tom. We still have to work out what the vaccination certification actually looks like to get into Europe, one, and whether the United States will actually reciprocate, two, because for the big airlines right now, what they want to see reopen and big time reopen is the London to New York corridor, Tom, and that has seized up in a major way over the last 12 months.
Yeah, I know the points guy talking about JetBlue being aggressive about one flight and then a second flight on as well. But it's really what I would suggest, John, is it links right in. I'm sorry, Madame Lagarde with ECB is actually watching vaccination and mask policy.
TK, do you think we're thinking about the wrong central bank when we consider the source of a taper tantrum later this year?
We'll have to see. It's going to be a surprise along the way. George Saravelis leads with a research note this morning with a terrific chart showing the Federal Reserve System is really an unbalanced view versus the other central banks. And what I love about it is he goes right to trade deficit dynamics. And the guy from Deutsche Bank, John, states no one will want to buy U.S. bonds. We're getting into balance sheet dynamics off of the rate story.
Lisa, you've been talking about this for a while. Either yields need to climb or the dollar needs to move the other way.
And this is something that people have been looking at and wondering what's going to happen. Here's the issue from my perspective. The reopening trade in Europe seems to be going strong. If you take a look at high-frequency data, it's already actually bleeding into second quarter data. It's not necessarily even waiting for Europe to find some sort of agreement on travel. Will it be enough? Does the U.S. exceptionalism story withstand? Or do people start to care about this record trade deficit that only seems to deepen as we get chip shortages and delays in shipping times?
Euro dollar 122 this morning. George Saravelis over at Deutsche Bank, Lisa, looking for 125 at some point over the next year.
At some point, though, being the key issue, because Mark McCormick of TD Securities yesterday was saying, yeah, he could see this eventually becoming a reality where you get an ongoing weakening in the dollar, but not yet, that actually it might stabilize. So timing has been such a tough issue. I don't really get how.
Always.
I mean, yeah.
Always. Dollar strength, the story this morning. Good morning to you all. Let's get you some price action. This Wednesday, losing track of the days, Wednesday, equity futures down 38, down 0.9 of 1%.
Only
Whenever I say
days.
the day of the day, I always think, have I got that right? Bond markets, 165.40, yields higher by a couple of basis points. Euro dollar 122.13, talked about that dollar strength this morning. Replacing the dollar weakness of yesterday, your dollar index, 89 handle. Crude, 64.15, down about 2%. On WTI, Lisa, at $64.15.
So, John, you talked about how perhaps we're focusing on the wrong central bank when we look at a taper tantrum. And today, the ECB came out and had a financial stability report. They were concerned about what the potential threats are to the market based on a market that they have influenced dramatically and caused to inflate. And this is something that I am looking at in terms of what the Federal Reserve indicates. How worried are they about financial stability? At 10 a.m., the Fed's Randy Quarles will be testifying in front of the House. He's going to be talking about the labor market recovery, about possibly tape. Who knows what he's going to exactly say? I want to hear what he has to say about financial stability. This idea of at what point will the Fed taper or withdraw some of their stimulus simply to foretell or pretend to try to contract the market a little bit from frothy conditions, as they've pointed out. Also today, Anthony Blinken, Secretary of State, will be meeting with Russia's Sergei Lavrov, the first meeting between the two ahead of a summit between Biden and Putin next month. And then at 2 p.m., the Fed meeting minutes. John, very interesting to see whether they start to indicate tapering, what that could potentially do to markets, and whether they'll continue to sort of double down on this transitory talk.
So we've heard from pretty much everyone, Lisa, over the last 4 weeks, 6 weeks, and I don't think anyone has indicated, with the exception of Dallas Fed President Mr. Kaplan, Tom, that now is the time to taper. It would be a big surprise to see anything like that in the minutes, wouldn't it?
We're going to see economic data. You're not going to see it in minutes, John, but I would suggest things are really fluid here, middle of May. Remember, we're going to a June 16th meeting. But again, John, I'm going to link in this morning the sundry pandemic news with the financial news we're all confronting. It's just every story seems to be linked to this recovery as cases come down and deaths really get to low levels.
Joining us now is Ron Temple, Lazard Asset Management, co-head of multi-asset and head of U.S. equity. Ron, let's just talk about a situation at the moment. There's this tug of war that we talked about yesterday with Mark McCormick of TD, a tug of war between US exceptionalism, Q1, and maybe a global synchronized recovery through Q3, Q4 going forward into 2022. Do you think it's a little bit more nuanced than that?
Yeah, I do. I mean, I don't believe in the idea of exceptionalism. I think the U.S. had a head start on the recovery. And let's admit, though, where the U.S. is likely to exceed the growth rate of other regions is we have a massive amount of fiscal stimulus on top of a recovery trade. So I do think the U.S. will continue to outpace the growth we'll see out of Europe and Japan. But let's make no mistake, there's nothing supernatural about the U.S. economy. We've just given it a lot of extra adrenaline to run on with the fiscal stimulus. And again, we need to wait and see what happens with Biden's infrastructure proposals. But we could give this recovery extra legs if we do the right thing and finally invest in our decrepit infrastructure.
Ron Temple, what is new in your equity allocation? There seem to be some real nuances now, people beginning to recalibrate for the mid-year view. What is new at Lazard?
Well, I think what's really interesting, by the way, is when you look at the indices and you see the S&P 3 percentage points below the all-time high, what you can miss is what's going on underneath the surface. I mean, if I look at from the period from the beginning of 2019 through August 31st of 2020, what we saw was a really strange dynamic where the top 10 companies in the S&P were 60% of the increase in the value of the index. The index was up something on the order of 39%. The median stock was up 23%. Since September 1st, a lot of people talk about value growth rotation. I think what's more interesting is the broadening of the market. The top 10 companies in the S&P 500 since September 1st of 2020 have been about 25% of the equity market appreciation. And if we look at the median stock, it's outpacing the S&P 500 by 1,100 basis points. So again, we've seen a much broader market. We've seen a much higher number of stocks that can deliver revenue and earnings growth. And I think there's still quite a few opportunities out there. So I think it's a really important time for people to step away from looking at the index and recognize there are a lot of opportunities underneath that number.
Sort of underneath these comments is the question of big tech. Can the S&P 500 continue to climb to new highs if you don't have participation from big tech, which hasn't necessarily kept pace with some of the broadening that you're talking about? What's your view here? Can the index reach new highs without tech outperforming, or do you expect them to regain their dominance?
I think the market can perform with big tech. I don't think big tech has to be the entire market, which was the case for a couple of years. And by the way, I want to carefully disaggregate. I think there are parts of the tech market that were extremely overvalued, and that those share prices were driven by cash flows expected in 5, 10 years. I think there are other parts of tech, maybe some of the most notable big tech names, they're delivering cash flow right now, and they're growing it pretty strongly. So I look at those stocks and don't see them as necessarily being overvalued in specific instances. So I think, again, this is a much healthier market driven by a much healthier economy. And by the way, what I love is, the conversation you guys just had about central banks. I think for the next year or two, central banks are important, but for the first time in years, they're not the only story. I think this is much more about the fundamentals of the economy, that reopening, and what we see in terms of the pandemic, hopefully subsiding into history.
Yep, and I think many people agree with you. Ron, we've got to leave it there. It's good to see you. Ron Temple there, Lazard Asset Management, co-head of Multi-Asset. This was the take that came from Max Kettner over at HSBC. He was talking to the team in the early part of Bloomberg Surveillance. The macro and fundamental outlook may have seen its peak, so fade the reflation trade and take some risk off the table. Now, I just wondered, Tom, whether that's worth exploring a little bit more. Have we got a bubble in inflation talk? And have we seen the peak of that yet? And what does it mean for the cyclical trade in the months to come?
The answer we don't know.
Shorter way of saying this, Tom, short question. What if the Fed's right? What if they're right?
Okay, what if they're right? I mean, that's a bet here as people like HSBC and Steve Major look for a lower rate regime versus others looking for a higher rate regime. Maybe in Rich Miller's story this morning for Bloomberg, the distinction between Lawrence Summers and Alan Blinder, they're not on the same page. I would go, John, to the range breakout, which you've identified as 1.74%. Essentially, we're nowhere near that.
Lumber futures, they've been hammered.
Lumber futures.
What happened to Home Depot yesterday?
What is a British guy looking at lumber futures?
What happened to Home Depot yesterday?
They was atrocious.
Great numbers.
I looked for an entry point and couldn't find it.
Traded lower. Well, Macy's up more than 70% going into the earnings yesterday. What did the stock do? Traded a little bit softer.
Well, and actually, if I may, Lowe's came out with earnings.
You don't need permission, Lisa, and you know
Lisa,
that.
Lisa,
I'm trying to be polite.
Lisa,
we're starting the show. Let's start on a polite note. I'm trying.
How rare. Lisa, you can comment on Home Depot because of the three of us, you're the only one that's been in it.
Hey, you built something recently for BetBell. I'm looking to, for example, at Lowe's. High expectations after the Home Depot results. They just came out smashing expectations. I mean, really, if you look at their earnings per share, more than double what they were last year, or perhaps almost double where they were last year. The shares lower by 2.5% in pre-market trading. John, this goes exactly to your point. Crushing estimates, increasing revenues dramatically, and yet still getting penalized in market performance.
And Lisa, I think the team here at Bloomberg picked up on this yesterday on the call with Home Depot yesterday. The questions around stimulus checks and how much that's helped earnings, and whether that dynamic will persist, because clearly it won't. Just very quiet on that matter and what the rest of the year looks like.
A lot of people can't have visibility right now. This is a unique moment.
There we are, the pendulum of visibility.
Oh
Lisa
my God,
Abramowicz,
the pendulum of
Tom
speaking.
Keene. I'm Jonathan Ferro.
We needed some glue.
Honestly,
Thank God
if you
Lisa
needed
showed
permission to come into the ever.
Oh, come on.
Ever.
I'm trying to be polite.
Since when?
That's true. Forget it. It's out the window.
Thank you. Yields higher by 2 basis points on a 10-year, 165.57.
Survived that block.
This is Bloomberg.
Maybe.
With the First Word News, I'm Rishka Gupta. Israeli airstrikes battered the Hamas-ruled Gaza Strip today, and Palestinian militants fired rockets into Israel again. All this happened while there was talk of a possible ceasefire. Israeli news media reported that Egypt had proposed a truce that would start on Thursday and that Hamas had agreed to comply. New York's Attorney General says her investigation of the Trump Organization has now morphed into a criminal probe. Letitia James had been focused on the assessment of a Trump property in Westchester County, New York. Former President Donald Trump's company was already under criminal investigation by the Manhattan District Attorney. And UBS has started a broad round of job cuts across its largest divisions. It's part of a restructuring plan designed to save the Swiss bank $1 billion over the next 3 years. The reductions are taking place in the investment bank, wealth management unit, and Swiss business. Over the next 3 years, as many as 700 jobs will be eliminated in Switzerland alone. And Bitcoin has fallen below $40,000 for the first time since February. That was when Tesla announced it was buying the digital coin and would accept it as payment for its vehicles. Tesla CEO Elon Musk surprised crypto advocates last week with an announcement that the company would no longer let buyers pay for their cars with Bitcoin. He doubled down on his criticism over the weekend. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Hamas is lobbing rockets into Israel to kill civilians. There is no moral equivalency here. I think we need to stand by our Israeli friends. Imagine what our reaction would be if somebody was lobbing these missiles into Washington. I think we'd be hitting back, but we'd be hitting back with precision.
That was Senate Minority Leader Mitch McConnell there on a situation in the Middle East at the moment. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Counting you down to the opening bell this Wednesday morning. Let's check out a price action. Your equity market on the S&P 500 declining 37 and down by 0.9%. Bit of a pullback here, guys. Yields are higher by a couple of basis points to 165.57 on 10s in the FX market. Dollar weakness yesterday, dollar strength today. Euro dollar down to 122.09 and off by 1/10%. And crude falling in sympathy maybe with what's happening in the FX market. 64.14, Tom, on WTI, down a little more than 2%.
You mentioned with lumber earlier, commodities a little off the ebb as well. Maybe that's a backstory. But I would note the VIX at 23.08, John, is not the angst yet of 27. We're just not.
I'm with you.
You know, we're just sort
of. Do you want to do a bit of Bitcoin too?
We're there.
Yeah,
the
XBT
please.
at 39,669 as it dances around. Let's call it south of 40K.
Yeah, I didn't trumpet it going up, and I'm not going to say yeah going down. I'm just like, I don't get it.
Well, hold on a second. This actually is very interesting because it highlights the regulatory risk. China came out and said that Bitcoin crypto assets were not allowed to be used for transactions. And this really highlights how you haven't seen lawmakers sign off on some structure for crypto assets. Just want to throw that out there. And then you've got Elon Musk. It's a fascinating story.
I'm with you, Lisa. I think that was a big piece of the move yesterday. The Elon Musk thing, I think, totally undermines the whole asset class. The idea that a single individual can spark a bit of a rout that we've seen so far this week, at least, I don't think is encouraging for even the biggest bulls of this asset class.
Under 40,000 here, down from that 58, 59 level. We will continue to watch. Michael McGlone on the watch at Bloomberg Intelligence. Right now in Washington, Emily Wilkins joins us. Emily, there's a collective memory of the Camp David Accords of 1978, of Sadat, of Begin, of President Carter. What the U.S. loves to do is create these moments, these events where we step in and create calm. What is there any chance this Washington of 2021 can create a Camp David Accord?
Well, President Biden was actually hoping to sort of avoid the big conflict that we are seeing right now in the Middle East. He was hoping to shift his attention to China, but that is becoming more and more evident with each passing day that that's not going to happen, that President Biden needs to continue to engage in the Middle East. But he's having divisions within his own party. You increasingly see more progressive Democrats making louder and louder calls for President Biden to stand up not just for the Israelis, but also for the Pakistani and for Pakistani rights. And even among some longtime supporters of Israel within the Democratic Party, you're starting to see them sort of more carefully word statements that they're not really in lockstep with exactly what Israel might want them to say or be hoping to hear from an American official. They've been supportive of the ceasefire measures and talking about the importance of really sort of protecting lives on both sides.
Emily, the president's first big overseas trip takes place next month. We've talked about this recently, and I just wonder how the emphasis shifts going into that now.
I mean, I think President Biden, he still has this goal of strengthening the U.S. relationship with its allies, particularly in Europe. And then, of course, there's the question of its ally in Israel. I think that certainly depending on what goes forward with the conflict that we're seeing right now, this could easily become a talking point that's need to be brought up during President Biden's trip. We heard Secretary of State Anthony Blinken bring the Israel-Palestinian conflict up on a recent trip to Europe. And I think it's just a matter of exactly how this plays out and what the U.S. feels it needs to do as far as getting involved and supporting a ceasefire measure.
As President Biden's focus increasingly seems to turn overseas, I do wonder the state of play here in the U.S. with some of the infrastructure spending. And frankly, even this plan, this $52 billion proposal in Senate to add to the chip industry in the United States as companies deal with an unprecedented chip shortage. Can you give us a sense of how quickly some of these bills could move through Congress and could actually get money into areas that perhaps need it?
So in regards to the chip shortage, the Senate right now is almost in the process of being able to pass an actual bill that addresses the chip shortage, as well as some elements with China and how the U.S. wants to respond to China. We're expecting a bill on the floor, I believe, this week or next week. This is something that's moving quickly. It has bipartisan support. On the transportation piece, you saw a number of Republican senators meet yesterday with several White House officials, including Transportation Secretary Pete Buttigieg. They came out of the meeting saying, you know what, we made progress, we had a good conversation, but they still didn't tell anyone how much they want to spend in a bill and how it's paid for. And those are really the big sticking points. And so there's still a lot of question marks around that infrastructure bill. The most prominent one is, are Democrats going to find a way to make this work with Republicans, or are they going to go it alone? That's a question that we don't have answered yet. Both the White House and senators said that they expect to have more meetings later this week.
Emily Wilkins, it is Wednesday. Is Joe Manchin having a good week?
You know, I think Joe Manchin must be having a pretty great week, because you've seen his colleagues, both Democrats and Republicans, and you've seen the White House go ahead and sort of move forward in these bipartisan negotiations, which is what he wanted all along, right? I mean, what Senator Manchin didn't say is this has to be bipartisan. What Senator Manchin said is there needs to be an effort to try and get to a bipartisan compromise here. And he's basically getting what he wants. And even if Democrats wind up saying, you know what, we're going to go at this alone, Manchin can say, hey, look, you had all those meetings, you went to the White House, you met with those top advisors and the president. There was an olive leaf extended here, and, you know, it didn't work out, and we're going to try and see if we can get something done.
Emily, thank you. Emily Wilkins there of Bloomberg Government down in D.C. The bank CEOs heading down to Washington next week. It was interesting to see Bank of America boost their minimum wage to $25. That's the goal over the next several years, Tom. In a similar way to the federal government, also telling their vendors that anyone that deals with the bank also needs to have a minimum wage of $15. And I just wonder, we're starting to see this happen, aren't we? I think it was Joe Weisenthal that said maybe we're starting to see this minimum wage come through the back door. The federal government is really anchoring expectations in a way that is encouraging for the people that want to see a higher minimum wage.
Yeah, I go with the backdoor theory. I think that's really true, John. It happens a lot within American economics, where you're OBE, overcome by events, to steal a British phrase. And John, what's so important to me is we always look at, in microeconomics, we always look at one, supply or demand, and ignore the other. In labor, we are ignoring right now the need for bodies.
So, Tom, we saw this with the fast food chains, McDonald's, Chipotle, over the last couple of weeks. Do you think that's different to what we're hearing from the banks?
No.
You think it's the same dynamic?
Really important question, John. We love to focus on the lower two deciles in our analysis. It's just a lot easier math. It goes right up the food chain. You're going to see it go right up the food chain. That happens each and every time.
You want supply, price needs to move, Lisa, bottom line.
Yeah, I'm wondering how much people's expectations for higher inflation ahead is also pushing them to demand more when it comes to salaries, and whether the unemployment benefits have given them that window to possibly negotiate, John.
These companies are grappling with a ton of demand, and these labour groups have basically got a little bit of leverage, Lisa. You want to meet the demand? Pay up.
And the interesting thing is, what does this mean for inflation longer term?
From New York City this morning, good morning. Alongside Lisa Abramowicz, Tom Keene, I'm Jonathan Ferro. Equity futures down 34 with negative 0.8%. From New York City, this is Bloomberg. From New York City for our audience worldwide, good morning to you all, live on Bloomberg TV. Here's the price action. Down 0.8% on the S&P. We pull back on a NASDAQ by a little more than 1%. On a Russell, off by 0.9%. Some defensive price action this morning in the equity market, at least. If you switch up the board and get to the bond market, a picture of treasuries, a picture of bunds. Treasury yields right now up 2 basis points to 165.57. German 10-year yields getting closer and closer back to zero. The demand for an auction out of Germany this morning, really soft. We've seen that through Europe in the core and the periphery as well. Right now, negative about 10 basis points on a German 10-year. That was negative 63 basis points at the start of November, and it's been climbing ever since, in line with that cyclical trade in the equity market too. The banks in Europe are up almost 70% since then. Through the same time period, we have had a fantastic run. My question is a simple one. What happens when attention turns away from that, the bond market, and turns towards what's happening in Italy? Italian yields have been climbing now for 7 straight days. That is a very different story to a bond market repricing on a better outlook. In Italy, watch out. We'll talk about that later. What does it mean for this? Switch up the board and finish on foreign exchange. Euro dollar. Euro dollar right now, 122 handle, just about clinging on. Dollar index, the big story yesterday with an 89 handle. Bit of dollar strength today, replacing that dollar weakness. Euro dollar year to date is down 0.1%. It has done basically nothing year to date. And Tom, we've talked about this tug of war. We did it with TD yesterday. The tug of war between US exceptionalism, which defined Q1, and then this cyclical trade that people have been waiting to build, which will hammer the dollar. And we just haven't seen it in a big way yet.
Yeah, and Ron Temple at Lazard leading us off today, really talking about a broadening out, and on a global economy basis, that broadening out clearly is a better Europe as well. We get lucky here. Our booking team is really wonderful at piecing together the people, the voices, the conversation with the news flow. Let us move from Target with terrific earnings coming out. One of the great joys of TGT folks is they come out with just very crystal clear headlines of their financial performance. And as we well know, retail doing better than good. Target with a sustained 30% margin. They say that this year's operating margin well above 2020 as well. We'll go into that as we go along. So much of this is the state of the American economy. A great student of this is a guy who I started reading at Lehman Brothers years ago. He's one of those people that writes a 3-page economic report and you hate him because you actually have to read the thing. Joseph Livornia joins us right now in the Texas after his public service to President Trump and the nation. Joe, wonderful to have you on. The great conundrum we have each day is the legs of the x-axis. We've got a boom economy. How long does the boom last?
Thank you, Tom, for having me on, everybody. The boom lasts for a while. I mean, the household looks excellent. You've got very high savings rates. You've got very high wealth positions. The labor market's improving. I mean, there's some friction certainly in the economy, Tom, but the household looks great. I do worry that after a 2021 boom, we're going to slow perhaps more than people expect next year. But a recession is still many years away. When you get these recoveries, I know it was a pandemic-led downturn, but when you get these recoveries, and now we're going to enter expansion mode in the second quarter with a big GDP number, they're not measured in terms of months, they're measured in terms of years. So it's going to last.
Joe, I want to take your income statement analysis on the American economy. I want to fold it over to your former shop. George Saravellos holding court with Deutsche Bank in London, and he notes the exterior dynamics, the trade deficit, the flow of funds within our financial system, and the foreign owners of our bonds. Do we risk instabilities as we come out of this boom economy when we look at the trade deficit or the current account surplus deficit?
I'm more worried. Well, right now, the current account deficit, Tom, right now is about 3.5%. It's on its way to 4%. It was over 6% back in the mid-2000s. I'm more concerned less about trade, but more about the fiscal side, where we're going to run a deficit this year of about 16% of GDP. And if we get this $4 trillion extra in spending, we could see deficits in the 10 to 12% range for quite some time. So I'm more worried about the federal spending, much less so on the international side. Remember, imports are growing very strongly. They're growing about 40%, but that's because the demand is so strong. As per Target's results, the consumer is robust. So worry more about the government's fiscal commitments, much less so about the international side.
Joe, what do you think needs to adjust, yields or foreign exchange?
It will come through the foreign exchange market because the Fed is likely to depress yields if interest rates were to rise. So that would be a risk, is that the dollar does soften. Right now, though, the dollar, as you were saying earlier, just regarding the euro, the broad trade-weighted dollar is about flat on the year. It's down from where it was last year, but that got a big surge because of the pandemic and the flight to quality. It's what we saw during the great financial crisis. But long-term, the dollar still looks stable. If the dollar was to collapse or plunge, that's a different story. But I don't see that right now in the cards. That's a risk, but I'd say it's a low probability risk.
Is this a risk, though, a factor, Joe, that you think maybe we're not considering enough? And that's not that the dollar collapses. I'm not in that camp, and I'm not advocating or even questioning that right now. I just wonder, going forward from here, we have shifted from a dynamic where the US has been importing disinflation, particularly from China, and that seems to be changing, Joe.
Well, here's the thing, though, Jonathan. If you look at the goods sector of the economy, it's booming. It's a big kink if you look at the growth, if you look at the dollar level. We're about, I think, 15% above trend, 10% above trend. It's a huge number. Where we've lagged is on the services side. So it doesn't surprise me that imports are strong. We've depleted inventory, so manufacturing production is big. We're importing all sorts of goods and materials, which is why commodity prices are booming. As the economy reopens and service spending comes back, you're going to see those pressures on goods moderate, especially as factories get fully back up to speed. So what I see on the commodity pricing side is really this is a post-pandemic price level adjustment, and we're going to see this inflation on the goods side dissipate. So I would still argue we're in a disinflationary environment, not an inflationary environment.
Can you elaborate on that, Joe, particularly when it comes to wages, the idea that we're actually starting to see wage pressures on the lowest end to even the higher end of the income spectrum?
Sure. The wage side, we are seeing lower end and middle income wages rise. We saw that under President Trump, actually, right before the pandemic. You had very strong wage growth. But broadly speaking, I don't see much wage pressure. For example, if I look at the employment cost index, I see that we're growing only around 3%. We're actually, the trend through last year has actually slowed. If I look at the recent trends in average hourly earnings, I don't see much acceleration there. And unit labor costs are still growing under 2%. So there are some anecdotes of certain industries facing shortages. People certainly are having to pay up for labor. McDonald's, I think, was one company that comes to mind. But broadly speaking, I don't see much wage pressure. And I think as unemployment benefits expire in September, you're going to see more people come back to work. In fact, there are about 21 states now that are limiting federal unemployment benefits. So to the extent that that was a factor, perhaps hurting labor supply, you're going to see that labor supply come back in, and you're going to see wage pressures moderate.
So this raises a question for the Federal Reserve and the actions that they should be taking right now. A lot of people have been critical, including Robert Kaplan of the Dallas Fed, saying that the Fed should act sooner rather than later to counteract froth in markets. You seem to be saying that they're doing the right thing, that they're holding tight, and that they should because these are transitory influence. What would you have to see to change your mind?
So you would need to see two things. You need to see that wage pressure really start to accelerate. Some real cost push or demand pull wage inflation. I don't see that. That's number one. Number two, you have to see inflation expectations, market expectations, and consumer measures of inflation expectations really turn up. On the market side, they're at about 2.5% if you look at five-year forward swap rates. But still, that's not, with energy prices up at 2.5% inflation rate after a long period of undershooting is not very much. So you need wages and you need inflation expectations. Right. That's what I need to say.
Joe, your career is a career of economic optimism. There's always a timeline, not of Morning in America, but just a real clear-eyed optimism on the U.S. economy. Do we massively misjudge now the x-axis? Are we just flying blind on the durability or duration of this fiscal and monetary stimulus that we have, where we grossly misjudge the positive benefits?
Potentially, yes, Tom. We do. I am an optimist. The CARES Act, the second CARES Act, was a $2.3 trillion package. It was unanimous. I believe there was one person in Congress that voted against it. The Fed moved with incredible alacrity. The economy is recovering. Clearly, as you know, Washington is debating an unprecedented fiscal stimulus or package of spending initiatives, and monetary policy has been very easy. So, yes, there is this possibility that we are creating some great risks. For better or for worse, we are testing modern monetary theory in real time. So yes, there is a risk. However, I will say that the dynamism of the U.S. economy, its entrepreneurial spirit, if you look at the business dynamic data last year from the Census Bureau, I mean, there's a lot of incredible things that this economy does. So I'm still an optimist, but certainly there are risks, no question, Tom.
Hey, Joe, it's good to catch up. It's good to see you. Come back soon. Joe Livornia there, Natixis, CIB, Chief Economist of the Americas. I want to turn back to Target. Every time I see a Target store, I think of Tom saying Target.
Yes.
Don't you just go to say Target? Anyway, Target, as the rest of you know it by,
I didn't know
Target,
that.
same-store sales in the first quarter, incredibly strong, 22.9%. The estimate was 10.3%. And the forward look is that the growth can continue. That's the communication coming from the chief executive this morning, Tom, for Target. The stock's up by more than 4%.
Well, I'll be honest, folks. In the media, the financial media, we lean on clarity, and Target is renowned, John, for clarity about what's actually going going on, the distinction between online and traditional bricks and mortar. There'll be a lot to learn there. But I would look at the compendium of them, what Dana Telsey and Joe Feldman did at Telsey Advisory Group, of saying, look, here's where retail is, all different types, and here's where they're going. And it was an optimistic summary.
The team on the live blog over at Bloomberg News doing a nice job on the Bloomberg terminal if anyone with a subscription wants to take a look. Lisa, for the stock price, we saw this from Home Depot yesterday. We saw it from Macy's yesterday. Nice forward look. Raised the outlook at a couple of the retailers yesterday. And what happened to the stocks? They faded. Be very interested to see if this holds.
Yeah, and the question to me really goes to the issue that we were talking about with Joe Lavorgna, the idea of the stimulus checks. If they are starting to slower, the unemployment benefits are starting to be reduced, how long can this spending spree actually last, John?
UI getting suspended, that additional UI that's been offered, suspended in 21 states. As Joe pointed out.
John.
Go on, TK.
I got mail coming in right now. Riley from St. Louis comes in and says, what is it, Shuggy? What do you pronounce it, Lise? Shuggy? Tarjay is Shugay.
Oh, okay.
I thought you were going to ask what Joe Manchin
What she's saying is I'm a tool. Let me translate for you.
Joe Manchin had a good day.
It's Wednesday. How is Joe Manchin doing?
Why don't you just email him?
Okay, well, he and Elon Musk will join me for a walk.
No.
That'll be a round table. Coming up, Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine.
I'm going to wear a
catch up
mask.
with her next. You're putting your mask on next. I might come in there in a minute. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden appears to be boxed in when it comes to the fighting in the Gaza Strip. Right now, he's able only to urge a ceasefire rather than taking stronger steps. The problem? The president's wary of applying too much public pressure on Israel, and he has a lack of influence on Hamas. European Union lawmakers reportedly will vote to formally halt an investment agreement with China, according to Politico. That's in response to sanctions against members of the bloc. The news site says a draft will demand that China lift sanctions before any progress is made on the deal. The EU lawmakers will also urge the bloc to cooperate better with the US. And shortages in the semiconductor industry have gotten even worse. Research indicates the gap between ordering a chip and taking a delivery increased to 17 weeks in April. So Sequena Financial Group called the wait, quote, the danger zone. It's estimated that the chip shortage will cost automakers $110 billion in lost sales. And London is now the most expensive city in the world to rent a warehouse. It beat out Hong Kong and San Francisco at a time when the pandemic is fueling a race for space. Warehouse rents in London soared 13% last year. That's according to data from real estate firm Cushman & Wakefield. Consumers responded to the pandemic by shopping more online, boosting the demand for logistics sites. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The problem in the issue is that we don't have any way of knowing who is vaccinated and who's not vaccinated. And I think that's where the confusion arises, because there are some establishments who are saying, well, I'm going to have people coming into my establishment, my store, or what have you. Some are going to be vaccinated and some are not. I'm not going to know the difference.
That was Dr. Fauci there speaking to Good Morning America from New York City. Good Morning America alongside Tom Keene. Lisa Abramowicz. I'm Jonathan Ferro. Why do we name the programs in America? Over in the UK, we'd just say the broadcaster. Here you name the programs.
They're formed by a secret committee of people that never speak to me.
Okay.
Surveillance
Is that out of respect for the,
you have no idea
what program?
Yeah.
Good morning, America. Equity futures down 33 on the S&P 500. We're down 0.8%. Good morning, the world. In the bond markets, 165.74. Euro tire. Sound like I've had a drink. Euro dollar 122.04. Coming in about 0.1%. Can I have a little look at Target just quickly? Target. First quarter sales 22.9%. The estimate was 10.1, and the forward look, it's a nice forward look. 215 on Target, up another 4% in early trading, Tom.
It's been really a struggle for Target. In the last 10 years, they're 18.8% total return per year. Let's call that on the edge of Apple. There is a giddiness here, just so you know, that we are mask-free for those vaccinated, which is a real benchmark over the 14 and 15 months that we've lived through, and others have been courageous of, including at the Johns Hopkins University. There, Lauren Sauer in emergency medicine joins us this morning. What should we be aware of, Ms. Sauer, as we are giddy? We have an effervescence of the end of the road, but like in Camus' The Plague, there's still got to be our radar up. What's our radar up about in this celebration?
I think celebration is a great word. I think people are excited to see this sort of opening as vaccine gets, into more arms. And that radar up is probably going to be around kids as we move towards getting more and more kids vaccinated and thinking about when they go back to school in the fall. And those pockets of the country that have lower vaccination rates that we really still have to be careful of and careful for as we target our new vaccine strategies.
What are we going to do in September? And let's distill this right down, Lauren. 600,000 kids vaccinated over 3 cups of coffee or 2 weekends. Everybody, and particularly the haves, the elites, are dashing to get their kids vaccinated to get to camp. What are you going to do in a classroom in September where you got 20 kids vaccinated and 10 not?
Yeah, I think we're still waiting to see what that looks like. I mean, I think it's going to be probably county to county, school to school. There's going to be a lot of differences in how schools reapproach in-person learning in the fall. And I think what we'll likely see is that in areas where masking was early uptake, that they will probably keep some masking requirements depending on how vaccinated their local areas are. And we'll look to those numbers of incidence and prevalence to really think about if incidence falls below a certain amount, will masks come off? Will kids be fully back in person? Will there be online options for kids who either can't get vaccinated or whose parents don't feel safe having them in school? I think it's going to be a patchwork of a lot of different strategies.
Just to sort of put a spotlight on this, when my kids go to school, I have to give a doctor's form to the school saying that they've been vaccinated for a whole host of diseases that have been in the works and established for decades. Why is COVID-19 different from that?
Well, I think right now it's different because there are not vaccines for all kids. And the vaccines that we do have are still in the emergency use authorization phase. So those vaccines that are on the list that kids take into school now are all approved and licensed products. And so I think we're moving there really quickly, that COVID will be another vaccine, much like flu, that you see on your list of required vaccines, but we're not there yet. And it is both a product of access and a product of where it is in the regulatory status.
Lauren, a question I often receive when we have these conversations is just, why are we vaccinating children? Why are we doing that?
Well, I think so. There's a couple things around kids. We know this vaccine is safe. We're seeing that as Pfizer moves into vaccinating more kids. Kids can be in high-risk situations and can also create high-risk situations. So even if their acute illness is less impactful for them individual, they can easily spread it to vulnerable populations, which is a high-risk situation in the schools. And we also don't know what long COVID looks like in kids. So kids who may not have acute infections really bad may still have lasting impacts from the disease. And that is one of the big things that we're looking at now on the science side, so that we move to protect kids quickly.
Lauren, just finally, you said something there about creating high-risk situations for the vulnerable population. Aren't they vaccinated now? Haven't they had the opportunity to receive a vaccine if they want one?
Yeah, opportunity is tricky because they have to be able to access it, and they have to have a path towards getting it. And so, when you're balancing both hesitancy and access, the first thing we do is try to educate and improve or reduce the likelihood of hesitancy, so improve the willingness to take the vaccine. But then in many high-risk communities, you still have an access issue. And so working on how you make sure that people who have overcome their hesitancy barrier or didn't have one to begin with can then take that next step to actually reach the vaccine. And I think in some communities, and particularly some high-risk communities, it is still a challenge.
Interesting.
When, Lauren, just to tie this all together, when will the youngest individuals, those under the age of 12, be able to be vaccinated?
There's several studies I think that are heading, or sorry, several vaccines that are heading towards that path now. I think we're waiting for the final studies to finish and the ACIP to review those recommendations before we see them moving in. But I would guess sometime in the next few months we'll start to see a clear timeline for that happening quickly.
Lauren, thank you. Always good to get your perspective, some clarity. Lauren Sauer there of Johns Hopkins. Lisa, it felt like some home bias to that final question.
Oh,
just
what?
There.
Me?
How did the two boys handle that if one can have the vaccine and the other one can't? How does that play out at home?
Lots of gloating. I mean, basically, the idea here is that they want freedom and that there are still restrictions until you're fully vaccinated. And even then, people are still being cautious. They want freedom.
So
they
one of the boys
socializing.
right now feels like he has more freedom than the other.
Correct.
Really?
And maybe or maybe not, it's held over the other one's head, perhaps. Just saying, theoretically.
Theoretically?
Yeah.
Just in case.
In case.
There might be two boys at home.
There might be.
Like
One
Good
was
Morning
able to be
America.
vaccinated.
I mean, I feel like I'm on Good
wasn't.
Morning America.
I think it's a really important conversation, these
It
dynamics
is.
at home. Not everyone gets sent off to camp, Tom, for the summer.
No, well, John, that's the heart of the matter.
Yeah.
And the inequalities of America, you got the elites dashing to vaccine repair, and a lot of other people aren't. And, you know, as President Biden and others have said, we got to fix that.
Well, I also will say this, that the implications, the social implications of the past 14 months for school-age children have been astronomical.
Oh, totally.
And that will be something that will be studied and dealt with for years and years to come. It has been a traumatic period. And to get people out and socializing, especially for kids, so
They're too
important.
busy playing Minecraft.
Thanks, Tom.
Lisa, I'm with you. The psychological impact across all age groups, including the over 65s.
Tom.
Mr. Keene. Coming up, Dan Alpert,
I thought
Westwood
Brandy
Capital
Melville
founding
was a
managing
next-door
partner.
neighbor.
He's going to join us shortly from New York City this morning alongside Lisa Abramowicz and Tom Keene.
We should all be together.
We
Equities
should.
down 32.
Maybe.
We're negative 0.8%. I'm just drawing things out a little bit, Tom. Just going to take my time before I get back in there. This is Bloomberg.
How do markets deal with a pace of growth that was so abnormally strong and is now slowing to something that looks more historically normal?
People, they don't like inflation. This is true, but they will tolerate it.
The fundamentals for most companies have been quite good, but the fundamentals for the reinflation trade have been even better. So everything has risen.
I think the risk of policy error is rising quite high.
Transitory gives the impression of over and done very quickly. I don't think that's what we'll see.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
It is Risk Off this Wednesday from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 35 on the S&P. We decline 0.8%. Call it 0.9%. And Target absolutely flying in early trading, up more than 4%. Another retailer in America doing quite nicely, Tom.
Retailers doing great here. The shift from yesterday is a foreign exchange dynamic. Yesterday is the yield dynamic today. And the yield, it's not a big move, but it's tangible. 164 out to 166, John, speaks volumes.
Equity futures coming in just a little bit. Yields higher, Tom, by a couple of basis points at 166 stateside. I think the focus for us this morning very much on Europe with bund yields. They've been climbing recently and Italian yields up once again.
Well, you know, John, we didn't know what it was like going positive yield to negative yield long ago and far away in Germany. We're going to find out a new experiment of going negative yield to positive yield. I guess that's good news for Mr. Saving at Deutsche Bank. Don't you agree?
Trying to get some time to look at a headline, Tom, from Inter Milan, said to near a $336 million bailout deal with Oaktree.
Oh, I
I'm going to get a
thought
bit more detail on that in just a moment. Just
but
seeing that headline across the Bloomberg, and I thought I'd bring that to you.
Thank you. That's the price I thought they'd get for Harry Kane. I mean, I can see Harry Kane going there for $300 million.
Might not be far off, to be honest with you.
Well, I know, but let's pause here and reflect on this. This is John, where things that are injured get solved by big money. I mean, that's what we're talking about.
And there's a lot of money on the sidelines waiting to solve things that are injured, Lisa.
Yeah, well, and this is talking about U.S. potential involvement, too, in European football, which was absolutely maligned
I nailed that,
with the likes
Lisa,
of
right?
J.P. Morgan and now Oaktree coming in, perhaps providing a lifeline. Look, there's a lot of money out there, and it really raises a question of where in the cycle we're at. And you talk about Europe reopening and people are putting money there. I am wondering, though, given the reaction to some of these earnings, Target put aside, whether people are indicating these are incredible earnings, the best earnings in more than a decade, according to some measures, and yet still we are mid-cycle, and this is backward looking. And I wonder how much that's going to be the predominant narrative, John.
Well, Target fading right now, Lisa. Still positive, but up by a little more than 2.7%. And as you mentioned, and we talked about in the previous hour, Tom, we saw this with Home Depot yesterday. We saw it with Macy's yesterday. Nice numbers, nice forward look, raising the outlook for several of the big retailers in America. And the stock price, we've already seen massive moves yesterday on the likes of Macy's.
John, I'm going to defer to our guests on this. But look, you buy on the rumor, sell on the news.
Precisely.
That rule's still there. The news comes out, everybody pauses, and then they recalibrate for Q3. They recalibrate for the holiday season coming up. That's a mystery, but that's what's going on here. You reset.
I will say this. The markets have been way ahead of Wall Street when it comes to expectations. S&P 500 companies are reporting the best quarterly results in at least a decade. 87% of companies so far have beat estimates. That's the most in the history of data tracked by Refinitiv. I am just looking at this, John, and wondering what people are looking for to change their view that we're mid-cycle.
Really nice FT piece on that, wrapping up the earnings, and I think that is the story as well, Tom. Analysts may be behind the curve on some of these numbers. Markets haven't been. They've ripped since the end of October to start of November.
Look, in the defense of the analysts, they've got to make their guesstimates.
I'm not here to beat up the analysts. I'm with you.
The boom economy. But, John, we're going to see this across different industries of a 10%, 8% GDP economy. To me, as Joe Livornia alluded to, do we really know what the path is of GDP to the end of the year? To me, it's a massive mystery.
Down 34 on the S&P. We declined by 0.8%. Here's your price action shaping up as follows. This Wednesday morning, good morning to you all. Yields higher by 3 basis points on 10s, 166.42. I've got no idea what you want to say. Euro dollar 122.
I'm just looking for an entry point on Target.
Nice.
I'm waiting for the conference
Big
call.
value add, down 1/10% on the euro. In the commodity market, WTI 64.37. We're down 1.7%. It's been 10 seconds, Tom. Anything else?
No. I'm
Only 3 seconds.
Okay.
I still think Harry Kane and Inter Milan. What do you call them? The Inter Milan what?
I don't mean to interrupt. Inter down 35
Inter.
on the S&P. We're off by 0.8%. Go on, Lisa.
All right, this is what we're looking at today, perhaps Inter Milan, but I'm watching at 10 a.m. The Fed's Randy Quarles will be testifying in front of a House panel. He is, of course, vice chair for supervision. He also does sit on that financial stability board and oversees it. I am curious to see what he says about his concerns about financial stability, froth in markets. Will he repeat the same warnings that we heard from the ECB? Expect him to have positive things about the economy to say. However, to reiterate the transitory word, go ahead, Tom. The idea here that we aren't going to see inflationary pushes that we've seen in the recent couple of months continue beyond that. Today, we see Tony Blinken, Secretary of State, meeting with Sergei Lavrov of Russia, talking ahead of a summit between President Biden and Vladimir Putin next month. Interesting to see what tone gets struck here and how much of a shift that is from President Trump's administration. And then at 2 p.m., the Fed's minutes from their previous meeting. How much will they start talking about the other T word, tapering? How much are they going to talk about how disinflationary risks remain the predominant risks in market rather than the inflationary push that many in the market seem to be worrying about? To me, this, John, is the dichotomy that's really driving the differences between different investment houses.
Yeah.
Do they see inflation as the bigger risk, or disinflation, or even stagflation?
Or decelerating growth later this year into next year. Tom, as you know, the history of all of this is when you get a dovish message from the news conference, maybe from the statement, usually the minutes is a platform to let the hawks dance a little bit. I have to say, I can only identify one hawk out there right now, isn't it, Mr. Kaplan? And basically nobody else. It's just levels of dovishness.
John, to the German move in yields, I'm sorry, the market is your big hawk right now. I mean, the market is acting as a surrogate hawk, and we've seen that before. That's not unusual.
I see that in Italy too. I'm telling you, I think the ECB is the more interesting one next month. And I'm not just trying to be controversial for the sake of being controversial. I just think the ECB has got a lot to grapple with.
I thought you meant Harry Kane.
And the ECB does not have the framework that the Federal Reserve has either. It doesn't have that framework to lean on. It doesn't have that framework that binds the hands of everyone on the governing council. It's very different.
No, it's very, very different. And what's going to be, we had Joe Livornia talking about modern monetary theory. it seems that Europe has to be incapable of affecting what the U.S. has done.
And I have to say, it will be interesting relative to the previous news conferences, just to hedge myself, because, Lisa, some of these news conferences haven't been interesting at all.
No. Well, but at this time, I think that they have to answer in terms of where the balance of risks are and what they could potentially do to ease financial conditions more at this point,
Can
John.
I bring in Dan Alpert now? Let's do that.
Yeah, okay, because then we got to get back to Harry Kane and AC Milan.
I'm looking forward to that.
Thank
Westwood
you.
Capital Managing Partner
Everyone
Dan Alpert,
is.
waiting patiently. Dan, we started by talking about this market. Great numbers. That's kind of defined earnings season so far. As we wrap things up, the response hasn't been great.
No, it hasn't. And let's put the target data behind us because that's exactly what the retail spike is behind us. Their forecast data is obviously quite good, and so is the same thing for many other retailers. You know, this is something that we all understood would happen as we emerged from the pandemic, and it's going to continue for several months longer, and then it's going to peter off and become more normalized. I think Tom's point before about the market being the inflation hawk is probably the most salient. The truth is that the market is still trading inflation, and even as the economic data has started to back off. I mean, think about this. We had this massive pearl-clutching CPI data come out last week. The 10-year, went up to around 170 and then fell back, and now it's kind of in the middle of that 160, 170 range. I won't believe that we're formally risk-off until I see the bond market yields actually collapse a bit more. But I do believe that is going to be coming. Because, as the inflation data became more and more understood later in the week, people realized that the things that had spiked were all the obvious things that you would expect at this point, given not only a spike in demand, but also supply chain shortages.
Dan, I've got to talk about your wonderful essay in the New York Times. You allude to your work at Cornell with Paul McCulley, who we all know from PIMCO ages before. How do we project America forward, say, out 5 years, given the correct way that we do infrastructure?
Well, so there are two big things, I think, to look at. I wouldn't even go out 5 years. I'd probably go out about 3 to 4. If we're able to actually enact the kind of packages that are on the table on the political side, I think America's future looks terrific. I think we're going to have a restabilization of inflation at a more normalized level relative to history. And I think we're going to see stabilized growth move from what was previously considered unattainable in this sort of post-grandeur level of economics, and stabilize somewhere in the 3 to 4 range. The problem is that we don't have that stuff on the table yet. It's not been enacted, and it's likely to be significantly watered down. So I do think you're going to see enough fiscal activity that clearly, given where yields are even globally, not just in the United States, there's demand for. But at the end of the day, there's going to be a lull in between a period of highly spiked inflation this year and where we end up in the economy going out, 2, 3, 4 years.
Dan Alpert with the reality check there from Westwood Capital, managing partner. Dan, great to catch up. Thank you, sir. One line there. The retail sales boom is behind us. Target still up in the pre-market by a little more than 4%, Tom.
We got to remember that Mr. Alpert's book, and really one of the strongest books out of the crisis, was The Age of Oversupply. And, we have to get him on for a longer period here, John, because it is about the undersupply and those logistic dynamics we're seeing industry to industry right now.
The future is brighter. Can we just sit on this just for a moment? Lisa, can you imagine us buying an electrified Ford F-150? Like the president mentioned yesterday. Do you think Matt Miller's going to buy an electric Ford F-150?
I don't. I'm going to say on the record for him to hear, I do not see him in an electric vehicle of any sort. Certainly not an F-150.
Lamborghini talked about doing that yesterday too, Tom.
What's a Lamborghini? I don't know what a Lamborghini is.
You don't know what a Lamborghini is?
No, it's a spaghetti, isn't it? I think, John, the F-150 thing is brilliant. It's going to be an amazing marketing campaign.
Okay.
Okay. What was
John,
that?
I drive in a Nash Rambler. Would you leave me alone?
Even I can't drive.
I had a garage.
I'm the only one with a driver's license
Lisa
among the three of us.
Only person with a driving license.
Just want to put that out there. I'll drive next time we take a road trip.
Tom likes to say we're driven. We're driven.
You're driven by me on the next road trip that we go on.
To be driven, not to drive.
In an electric car.
In an electric Ford F-150, apparently. Down 0.9% on the S&P. TK, Lamborghinis are spaghetti. What is that? Detroit bias? Is that Detroit bias? Is that what that was?
No, that's not my Detroit.
Sounded like it.
What did
Detroit had a no-hitter yesterday.
This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Target's first quarter sales blew past Wall Street estimates. Comparable sales rose almost 23%. That's more than twice what analysts had been forecasting. Target says it expects wider margins for 2021 than it had foreseen earlier this year. It's a sign that the year-long home improvement boom isn't over. Lowe's posted first quarter sales that beat estimates also. The chain has adjusted its strategy to keep the customers it won during the pandemic. It's extending its spring sales and improving its digital business. Israeli airstrikes battered the Hamas-ruled Gaza Strip today, and Palestinian militants fired rockets into Israel again. All this happened whilst there was talk of a possible ceasefire. Israeli news media reported that Egypt had proposed a truce that would start on Thursday and that Hamas had agreed to comply. And New York's Attorney General says her investigation of the Trump Organization has now morphed into a criminal probe. Letitia James had been focused on the assessment of a Trump property in Westchester County, New York. Former President Donald Trump's company was already under criminal investigation by the Manhattan District Attorney. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We did a hard pivot to digital. We really worked on our cost structure. We really focused on new categories that customers were voting on. And so that, coupled with the economic tailwinds of this, you got a healthy customer, they got lots to open to spend, they have, low debt, they're ready to spend, they're ready to get out.
They're ready to spend, they're ready to get out. That was the Macy's chairman and CEO, Jeff Gennett, there on the earnings in the last 24 hours. And the numbers were pretty terrific. The run in the stock has been amazing, up more than 70% into yesterday, year to date. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Your market 2 hours and 12 minutes away from the opening bow, set up as follows. We do decline by 40 points. We're off by almost 1 full percentage point now on the S&P 500. Yields do not provide you with your buffer at all. They are higher by 3 basis points to 166.59. Treasuries not doing the work you might want Treasuries to do. In the FX market, euro dollar just about 122 at 121.99. Some dollar strength in the mix this morning, Tom. Euro dollar down 0.2%, and crude off by 1.8% to 64.29.
Yeah, the dollar's really out of it from what it was yesterday or Monday even as well. I'd say it's a yield study for all of you watching and listening on TV and radio. The 166 gets my attention, and I would measure the 23.29 on the VIX is not 27. We're nowhere near the angst of a number of days ago. Good news on retail. Stephanie Wissink nailed it at Jefferies. She joins us this morning where she's recalibrated on comp sales and stuff. Stephanie, I want to get out on the x-axis to into the holiday season. Do you have any vision, any idea, any new information on where the retail juggernaut will be past August, past October?
Yeah, it's a great question. I think, we're seeing evidence that the consumer is interested in re-engaging with retail. Actually, across the board, Walmart, Home Depot, Macy's, Target, Lowe's, all beat handily and all signaling that comp momentum has persisted in Q2. As we look to the back half, we're looking at a few key indicators. The first is back to school. That will be the next kind of signal of confidence that we're back into a cycle of normalcy. We didn't really have a back-to-school season last year. It was a very unusual back-to-school period. So this year we're looking for those signs that not only the youth are returning to the malls and to apparel retail, but are really going through the motions of a back-to-school purchasing cycle. We're also keeping an eye on what's happening in fashion. We've been in a bit of a fashion rut for a number of years. We've been living in leggings and fitness apparel, and we're now seeing indications that these exploring fashion again, that we might be seeing the early signs of a fashion cycle. And then lastly, I think we're just looking at the strength in home. The home improvement has been so strong over the course of the last 12 to 18 months, and home ownership is rising. So how durable is some of the investment in the home, and do we move from what we call hard home into soft home as we get into the back half of the year as well? So all of those things are top of mind for us, looking at the consumer and how she is behaving and looking where she's prioritizing her dollars.
Stephanie, can you give us a sense of whether some of these companies are gaining market share or whether they're just exploiting the reality of an incredible savings glut in American households from pandemic checks and other aspects and the fact they haven't gone out to spend? I mean, can you give us a sense of which will be the winners out of this pandemic spending boom?
Yeah, it's a really interesting question because I think there are two classes. There are going to be the survivors, those that make it through. Clearly, there are some that aren't going to make it through. And then there are these winners. And I think that the upper class of winners really has three basic characteristics. Number one, they've used the pandemic to accelerate their omni-channel initiatives. They were already underway. They pressed the gas pedal down, and they effectively trained the consumer to adopt some of these click and collect, curbside pickup models, which is actually net beneficial to margins. The second characteristic is that they upgraded their merchandise assortment. So they looked at the categories where they have clear definitive advantages, and they pressed hard into those categories. And then third, and I think this is probably the one that's going to be the most curious to keep an eye on, is how they are engaging with their consumer. How are they going beyond just the transaction? Collecting data, personalizing the experience, customizing it, because we do know that as we come out of this pandemic, there is a cohort of shoppers that wants to go back into stores and wants to feel welcomed and that the shopping experience is at an elevated level. Otherwise, it's just easier to order online. So I think we're looking for those companies that have also spent time thinking about their store experience just as much as their digital experience.
Stephanie, forgive me for jumping in. I just want to take some attention to elsewhere. The China state broadcaster CCTV citing the state council meeting that's taking place, urging the government, I guess officials in China, urging those to curb the unreasonable commodity price rise. Tom, it's a very small move, mild move in the commodity market. Copper down by about 2.89% now at session lows, but a headline I think worthy of attention this morning.
No, I totally agree. And you see copper roll over here. And the fact is the chart on a very short-term basis is not constructive. But, John, it's had such a run-up on a standard deviation basis. It's miles from mean reversion.
Raw materials, labor costs, all of the above has been a big concern. Stephanie, just to come back to you and get a final comment on the price pressure that's coming through for some of these companies. What does that look like for the retailers?
Yeah, every single company has talked about rising wage costs, particularly wage inflation, but also has signaled that there is some product price inflation that's likely to come through. So we're also monitoring the CPI as we get through the middle part of this year and into the back half. I do think we're going to see a step function in consumer pricing.
Stephanie, got to leave it there. Thank you. Come back soon. Great call on Macy's. Year to date, what a rip that's been. Stephanie Wissick there, the Jefferies equity analyst. Copper down by about 2.77%. It was down going into that headline by a fair bit. A big chunk move lower, 64.21 on WTI, came before that headline too. We're down by about 2% on crude. Well, not a big headline, Tom, just something worthy of attention.
No,
Lisa mentioned the Bitcoin dynamic and the comments coming out of China
John,
too.
I'm glad you brought it up. I think it's a big headline, and we've got Bitcoin moments away from a triple bottom and breaking down into new weakness here, going back to 1 a.m. In the morning. We're not there yet, John, but we will be there by the time we go to break.
Just a bit of commentary, Lisa, coming out of China.
Yeah, and the question is, both from a state-sponsored perspective, how much are they going to counter some of the pressures that we've seen in prices from commodities, but also on the consumer side, how much are people going to stop buying as much or perhaps invest less overall if you do see these prices continue to rise? I mean, this goes to the whole stagflationary, disinflationary environment that when prices of staples really increase, people buy less.
What do you make of this defensive move this morning? We're down about 1% now in the S&P, negative 42.
You know, a lot of people are blaming inflation, and yet last week was really when we got the data. I think that people are looking around and they're trying to see what is the next positive surprise that's going to come. And I think that that really is the issue, as it has been for months. Really, have the gains already been baked in? Are we heading into mid-cycle?
Do you get frustrated whenever we get a drawdown, an equity market that's lower by 40 points, the S&P down 1%, we blame inflation fears? Every single time, Tom.
It's a parlor game.
Every single time the equity market's down, inflation fears.
Do you get annoyed, John?
It's a set of worries. You can't go up without a set of worries out there. Clearly, we've got a set of worries.
Read it between the lines.
I try.
All I can suggest is, we just had a new low on Bitcoin. John, to me, it's the pendulum of positive surprise. We don't want too much positive surprise.
Everyone was shocked by how bullish Lisa was on Monday.
And then I went back to sleeping,
Clearly.
not very much.
So you get a week's vacation, and it translates into a day of bullishness.
Just think
1 week, 1 day. That's
just
the
think
ratio.
if you actually gave me a
week's rest,
sabbatical.
a day's bullishness.
Yeah, pretty
From
much.
New York, this is Bloomberg. .30 in New York City. From New York, for our audience worldwide, good morning to you. Bitcoin, session lows. We're down and down hard on the S&P 500. We're lower by 42 and off by 1 full percentage point. Tom will run you through XBT in just a moment. Your NASDAQ is off by 1.4%. We roll over here on the Russell to small caps, down by 1.24%. That's the equity market story stateside. Let's get to the bond market on both sides of the Atlantic. Treasuries we've talked about. I want to talk about Europe briefly and get to the banks. In Europe, the banks right now are up by 27% year to date. In America, the banks right now are up by 34% year to date. Now, the story here has been clear. Yields have been climbing. In Germany, yields have been climbing in a treasury market, and that cyclical trade has played out on both sides of the Atlantic, even though Q1 was a story of US exceptionalism. So this is where I want to finish. I want to get to the bond market quickly, if we can switch up the board and get to Germany and get to Italy. If bond yields price back towards zero, in isolation, you would say that's good for the banks in Europe. What happens if Italy comes along for the ride? We've had 7 straight days of Italian yields climbing. We've had soft auctions in Europe, across the curve in Germany, even at the front end on twos. And we had a soft auction in Germany this morning. We had a soft auction in Italy last week, 1.12%. I just wonder, TK, whether there's a little bit of a tantrum starting to evolve in Europe at the moment. If you just looked at Germany, you could say that's consistent with a better outlook. I get that. When I look at Italy, though, I don't think that's consistent with what the ECB wants to see. That's why I'm interested in that ECB news conference coming up in a couple of weeks' time.
You know, I think it's a chess set. I mean, I look at the Swiss 20-year at a 0.14%. That tells me your tantrums there. You've got it within the bond space. But that tells me I need Euro 123, Euro 124, John. It's not there yet.
We're not. And I did see a 121 just briefly this morning, pulling back from 122.
Yeah.
But maybe the pressure comes from the bond market, Tom. Maybe it doesn't come from the FX
John,
channel.
what's great about this, you're yapping away and BitDog's down $1,000. Maybe if Romain talks, we'll be down another 1,000 after that.
We'll get to Bitcoin in a moment. Romain's got to go through the retailers for us first, Tom. Patience. Romain, good morning.
Hey, good morning, John. Yeah, let's start there, and we'll get to Tom's point in a second here. We did get earnings a little bit earlier this morning from Target and Lowe's. Keep an eye on these names, though, because remember, we had relatively good earnings yesterday from a lot of the retailers, yet the rally in those stocks faded pretty quickly as we got deeper into the day. Target's numbers, they were phenomenal, pretty much by any stretch of the imagination. The comp sales growth itself, that pace was about twice what the street was looking for, and they guided pretty aggressively going forward. Similar story here for Lowe's, but remember, Home Depot also knocked it out of the park yesterday, and its shares fell. Keep an eye on VIP Shop. Remember, this is one of the stocks that got caught up in the Archegos sell-off here. Those shares that were down about 30% in that Archegos sell-off at the end of the quarter. One reason why I bring this up is hedge funds piled into this, we found out, basically buying the dip. Since then, we've seen about a 17% drop. The shares down 5% here in the pre-market. This after the company coming out with its latest earnings, and they weren't necessarily good here. Of course, a big retailer, online retailer over there in China. So that's the setup here in the retail space. But what everyone's going to be talking about today is really this breakdown that we're seeing right now in the crypto space. It's not just Bitcoin. It's pretty much across the board of all of the crypto assets out there. Tesla, of course, was the one that kind of sparked this whole rally. We went from what it was at 38,000 back in early February to above 63,000 on BitDog. Now we're basically back down around that 38,000 level again here, Tom. And a lot of people are really starting to question whether the technicals have basically been broken and really whether the faith has really been broken. It was the embrace of institutional owners. It was the embrace of people like you that helped drive this thing up to 63, 64.
Yes, that's true.
Are you still in, Tom?
No, I top ticked it at 59,000. Thank you.
Romain, he's in nothing.
I took it as small as Coinbase would let me there just to slide
that
in.
fell, however. Big Bitcoin.
You know.
Big Bitcoin
Nail
investor.
that puppy. Bitcoin down about 10% since the 4 o'clock hour this morning, right now with a 37 handle, 36,000 handle moments ago. Right now, and this
Romain,
is
thank
really...
you.
Yeah, Romain, thank you.
You're welcome, John. I appreciate that someone thanks me.
There are some manners on this program, I assure you. Don't worry.
Yeah, Bitcoin will be
Somewhere.
29,000
Really?
by the time we get to the close this afternoon. Right now, and this is important, Jane Foley joins from Rabobank, and what is fabulous about her work is she's always looking at the synthesis. It's just not about gaming what sterling's going to do or gaming what the dollar's going to do. It's a synthesis at Rabobank of what we see on the speculation side and the hedging side of what foreign exchange says. Jane, what does foreign exchange say right now about the cards that Madame Lagarde has been dealt? The synthesis of everything John's been talking about in bonds, in foreign exchange, in the real economy. What does it suggest to the head of the ECB?
Well, before we have the head of the ECB, we also got their economists due to speak this afternoon. And I think it really is going to be interesting to see how the ECB reacts, and not necessarily to the level of the euro against the dollar. That's going to be interesting too. But what's really caught my attention this week, and irrespective of what's happening in cryptos, irrespective of what's happening in various commodities, I think it's the move in European bonds. We have seen Italian bonds push high. We have got stories about German 10-year bonds returning potentially to positive territory. That is something which I think is a really big potential news story, and something which I think that the ECB really will want to address.
Well, Jane, the Federal Reserve has a new framework which basically ties the hands of pretty much everyone on the FOMC, for all the voting members at least. The Governing Council does not have that. President Lagarde does not have the luxury that Chairman Powell has, which is basically telling everyone, you've all agreed to it, this is the story, stay on script. How does this play out in a Governing Council, the Executive Board, in the coming meeting?
Well, that's what's really going to be interesting to see. Of course, there is a lot of anticipation that at some point maybe the ECB will also turn to an average inflationary target, allow inflation to move above 2%. And even if they don't formally do that, I think to some degree that there might be some relaxation in order for that to happen. I mean, bear in mind that the Fed weren't the only person or the first central bank to do that. It was the Bank of Japan, and there's a lot of psychology tied up with why they would want to do that. So I think that's quite possible that they will potentially allow inflation to push higher, that they will be quite relaxed. After all, they would like their interest rates to get a little bit higher too, so they have more ammunition for the next downward cycle. But I think this is about, do they want yields to go up higher now? Do they really want to see this tightening in financial conditions? And I suspect that right now they don't. We've got to remember that we've still got a lot of restrictions. We're seeing relaxation in restrictions this week in France.
Yeah.
But certainly during the current quarter, we're still going to see some nasty economic data. So I think this is perhaps a little bit too soon in terms of the tightening in financial conditions that the ECB would want.
Euro dollar 122. Just compare and contrast the volatility, the price action in the FX market to what's happening elsewhere. Euro dollar down 0.2%. Lisa, Bitcoin off by more than 12% now, just south of 38K.
Yeah, although there's a question, can we compare Bitcoin to currencies? And how much, frankly,
Clearly not.
is clearly not, right? And although there is a question of whether this is the best barometer of the marginal risk-on, risk-off sentiment. And Jane, how much do you look at Bitcoin, understanding that it is not analogous to the other currencies that you track, in order to determine sentiment and the path, frankly, of moves in more traditional, perhaps more well-accepted asset classes?
I don't look at it that much as a particular gauge. To me, Bitcoin is very much more about sentiment within the retail investor, and there's a real crowd mentality there. And of course, we've seen a couple of negative headlines. I mean, again, from China today, saying that financial institutions won't or shouldn't be using Bitcoin, and that just was another negative headline. I think that's created a big surge to the doors for an awful lot of retail investors. So we know that this is volatile. We know that this is a very early stage of digital currencies, and we're going to be watching this for years. And we also know that central banks are going to be very reluctant to allow money supply to move out of their hands and into the general population. So in some respects, perhaps it wasn't a big surprise what the People's Bank of China said today. Maybe that was just a matter of when they were going to say that. So we know that that's going to be a volatile asset. We know that there's volatility in many commodities, but I don't think you can really put that analogy on foreign exchange. It's a very, very different asset.
Jane, that being said, there is a question of what precedent this sets for volatility that could come from digital currencies backed by states. And we've seen this from the Chinese government and when they said about the digital yuan. And we've heard that the U.S. is examining having a digital dollar, which could frankly disintermediate a lot of banks and create some volatility with people looking for a store of value that is separate from a physical good. Have you modeled what potential FX impacts could stem from announcements that are expected on the digitization of sovereign currencies?
Well, this has got to be a long-term thing, and you've already explained why it will be a long-term move, and that is because it's going to be such a disruptive element towards the banking sector. We've seen from the central banks that a little bit more advanced in doing some analysis, for instance, at the Riksbank in Sweden, and they have come to the conclusion that they're going to carry on looking at this for many years to come. The Bank of England is another central bank that's begun to look at this. The Fed, Israel, another one. So many central banks looking at this. But what we know is that, yes, it's going to be massively disruptive for the financial intermediary sector, banks, and therefore no central bank is going to allow this to happen anytime soon. And in order to allow for a slow progression and a slow adoption of these central bank-run digital currencies.
Jane, got to leave it there. Thank you. Jane Foley, Rabobank head of FX strategy. Bitcoin right now off the lows, bit of a bounce. Tom, still down about 11% on Bitcoin to 38,500.
Yeah, I got a buy limit order in at 40,000. I mean, if I get a print at 40, I may step in, but
you got a serious
an entry point.
Got a serious take on this, Tom, or no?
Yeah, my serious take is that I wasn't bright on the way up, and I'm not bright on the way down.
And I don't think I share that view, to be honest with you.
I don't think people need my opinion on crypto. I try to talk to experts. I try to read, the academics on the different parts of it, the banking part of it, what James Dimon is focused on, and what, retail's focused on and their belief in this.
Well, I think a lot of people who run asset managers, Tom, they want to give access to the clients that want access. And Lisa, more recently, they've wanted access after this big run.
And I think that Troy Gajewski of Skybridge talked about how this was the macro trade. Basically, the idea that central banks and federal governments around the world were printing money and that this would lead to a debasement of traditional currencies. I am wondering if people are rethinking some of that macro bet, especially as places like the United States look at possibly paying for some of these programs with higher taxes. They look at curbing the actual overall price tag. I do wonder how much on a longer-term basis that's going to play into this trade.
Well, everybody who did their tax return will know here in America, what was one of the first questions on that?
Any crypto assets.
Any crypto assets to declare?
Yeah.
Have you bought any cryptocurrencies this year?
Yeah.
Right top of the pile there, Tom, wasn't it?
It's the
Did you do your own
I'm gonna get in so much trouble here. I can just hear the hate mail coming in right now. John, it's the pendulum of debasement. You know what? All the institutional marketing garbage, it's great until the thing goes down.
Pendulum of
and
confusion.
then there's like silence.
Well, it's down now. And you're very silent. You're very quiet. You sound like someone that might have not had a cash position.
Prada has some Dogecoin.
Maybe you were playing around a little bit.
John, Prada bought Dogecoin for
Coinbase.
nothing. She's buying a Fender Telecaster.
Been years of projecting. From New York City, alongside Tom Keene and
Jimmy
Lisa
Page
Abramowicz, I'm Jonathan
off
Ferro.
Dogecoin.
Your equity market's down 45. Let's get real. We're down 1.1% on the S&P. 40.78.
John, you don't even know who Jimmy Page is.
This is Bloomberg.
Jimmy Page Telecaster off Dogecoin.
With the First Word News, I'm Ritika Gupta. President Biden appears to be boxed in when it comes to fighting in the Gaza Strip right now. He's able only to urge a ceasefire rather than taking stronger steps. The problem, the president's wary of applying too much pressure on Israel publicly, and he has a lack of influence on Hamas. And President Biden is looking to build on a denuclearization agreement Donald Trump reached with North Korea. That's a move likely to be welcomed by South Korea. The 2018 agreement between the former president and North Korea's Kim Jong-un was a bare-bones declaration. It called for the two sides to work towards complete denuclearization of the Korean peninsula. The ECB is relatively upbeat on the economic outlook as it prepares for a crucial meeting next month, but it acknowledges mounting risks to financial stability from overvalued asset prices. We've been speaking with its vice president.
Risks looking forward and going forward are much more balanced than in the past. On the one hand, you have the speed up in terms of vaccination. Vaccination is gaining momentum everywhere in Europe, and we are catching up. We are reaching the gap, as I said before. On the other hand, you have risks and uncertainties. The variants of the virus.
That was the ECB's Vice President speaking to us earlier. Global News 24 hours a day. I'm Ruchika Gupta. This is Bloomberg.
We're confident that the investments and tax proposals in the jobs plan, taken as a package, will enhance the net profitability of our corporations and improve their global competitiveness. And we hope business leaders will see it this way and support the jobs plan.
Janet Yellen there, the Treasury Secretary from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Counting it down to the opening bell, about an hour and 42 minutes away. Equity markets near session lows, down 43 on the S&P. We're down a little more than 1%. Bitcoin getting hammered, crushed, cratering. Pick your word this morning. It's not doing well. Euro dollar 122 flat. We're down about 0.2 of 1%. Dollar showing just a bit of strength through G10. In the bond market, yields heading the other way, up 2 basis points to 165.57, and WTI $64.11. I often say I feel very fortunate, privileged, lucky to have one of the most sophisticated, engaged audiences on the planet. Tom, tell Tom Jimmy Page played a Les Paul. Come on.
No, I know
Gibson.
that. He did a deal with Fender the other day,
so
he's got a Fender
about?
Telecaster. It's a James Page Fender Telecaster. I don't know.
Just thank you for clarifying.
Prada bought Dogecoin for nothing, and she's unloading it for a Telecaster. I think she's the smartest one on the block. Okay, this is important. This is what we do at Bloomberg Surveillance. We've done this with Bloomberg on the economy for years. We rip up the script. We're going to do that. Michael McGlone's going to join us here in a moment. But right now, David Wilson, Visual Guide to Financial Markets author. We're waiting for Visual Guide to Crypto. Do we get Visual Guide to Crypto?
Well, I'm going to give you a visual guide to quality. How about that?
How about that? Give me a visual guide to quality. What do you got right now, David?
Absolutely. It's Morgan Stanley sort of highlighting what may be a developing shift toward higher quality companies and away from lower quality ones. Now, there are all kinds of ways you can define
So they go
quality.
long Apple, right?
Yeah, and that sort of thing for sure.
Okay.
So it comes down to, just looking at an index which in essence, buys the highest quality companies within the Russell 3000 index and bets against the lowest quality ones. And, going back to March of last year when we started to see stocks taking off, I mean, that bet really went awry.
So what's it look like?
It's looking a whole lot better now. I mean, this index that Morgan Stanley uses was down 58% in about a year. It's starting to come back, and their chief U.S. equity strategist, Mike Wilson, is saying, look for more of this. And it's basically an economic argument he's making, the idea that we've kind of moved beyond the early stage of a recovery, and we're getting to the point where you have to think about what's called mid-cycle investing. I actually saw that popped up in a report from Nick Collis at DataTrek as well, so I knew it was something that needed to be highlighted.
Is mid-cycle going to replace transitory?
It may well do that. Who knows? And so you see just that little bit of recovery in the last couple of months. And so Morgan Stanley saying, look for more.
Visual Guide to Crypto doesn't float your boat. David Wilson, Visual Guide to BitDog, does that work out?
Well, I don't know. I haven't looked that closely at BitDog yet.
We will look at it right now. Bitcoin, of course, and all of crypto having a challenging morning. We get a brief from our Michael McGlone, truly world-class on this. What's the why, Michael McGlone? Why is Bitcoin and others suffer?
Hey, Tom, I think the more significant thing is Bitcoin is a high gamma trade that's leading everything lower. Every asset is down today. Excuse me. I don't see a commodity in a Bloomberg commodity that's up. So to me, that's the bigger picture. It's the gamma leading it lower, the high value trade. Yeah. And Bitcoin's getting into some good support levels here around 40,000. It's a bit below it now. The question is how much lower it goes. I think it's the lower tide that matters. Even bonds are down today. So what assets up? I looked at the commodities. I thought it was live cattle, and I noticed I had a late print.
Mike, this is actually a really important point, and John was actually asking about this earlier. How much is the decline that we've seen in Bitcoin driving other things lower? Is this something that stems from and possibly exacerbates a risk-off feel across assets? Is that really what's going on, and what then is driving it?
I think it's less driving, at least, and more indication, because this is talking about Dogecoin. There was an indication of massive froth in the space, most notably cryptos. But what I think we're seeing now is what the market's way overdue for, and what there's nothing that authorities in the Fed can really do for is when everything goes down, which means everything just got way too high. And I think that's what's happening. And to me, the biggest risk to Bitcoin was a macro correction, and I think that's what's starting now. So maybe it gets to 30,000. I think it's unlikely it gets there, but if everything goes down, if the stock market continues just simply mean revert, Bitcoin's part of that. And remember, it's the high gamma part of it. So to me, that's the bigger picture. I think most money managers today, if they have a partial allocation to Bitcoin, they're not so worried about Bitcoin. They're worried about everything else. Even gold is down. Bonds are down. What's up today?
Well, the other backdrop here, the other bigger picture here is regulatory pressure. And we saw that out of China overnight, the idea that they could potentially reiterate their view that crypto assets would not be accepted for transactions. How much does this lead the way for similar regulatory pressures in the United States? And how much does that really push institutional investors away from the asset class?
Well, it's not much new, Lisa, and most people look at, isn't that the same country that banned Winnie the Pooh? I don't think most people are so worried about China banning, because they have issues. They have to steal intellectual property. They have to protect their currency because they don't have open discourse. They don't have open markets. They don't have people like me criticizing everything. So I'm not so worried about that. I think most people
still criticizing.
Well, I think most people expect that. But to me, this triggers a weakness in the space. Bitcoin was supposed to be holding above 40. It's not. So I guess it's a lot weaker than most of us think. To me, it's the macro bigger picture. And I look at it as Bitcoin is part of that today.
Mike, I'm not going to do a technical analysis. That's not my job here. I'm looking at the Bloomberg, and I see comfort in your 30,000 idea of where the gamma takes us, the acceleration of this trend. To halt a negative gamma, somebody has to step in on the bid. Is a broad statement, who is the institution that steps in on the Bitcoin bid? Is it retail? Is it institutional? Is it somebody I don't know?
Tom, I think it's more institutional, but today everybody's more worried about margin calls and everything else. And if the key question is, if this continues, Bitcoin is just a small part of that. Even gold is a small part of that. And we know what happens in these environments.
So this is critical. Mike McGlone, are you assuming that at 2:30 this afternoon, which is typically margin call time, we're going to get some Bitcoin joy?
Well, I don't know about Bitcoin joy. Right now, it's hitting margin calls in everything. I don't see anything that's up. So to me, that's the more significant part of it. And it's also the market just had so much froth. This is the market just mean reverting. The question is how far it goes. And I think people are less concerned about that this morning. They're just more concerned about just selling what they can.
Mike, I think you're right. It's across the board this morning, that's for sure. Mike McGlone there, Bloomberg Intelligence. Wherever you look, crude, Brent down 2%, WTI down 2%, copper off by 2.7%, gold lower, softer, heading south by 0.8%. The bond market in the red, yields higher by 2 basis points, 165.91. Seeing the same story over in Europe. Equities off by 1%. The Nasdaq doing pretty badly as well. It's just defensive across the board here, Tom. It's not pretty.
Yeah, it's not pretty. And again, I'm watching VIX as the metric. It really hasn't popped 23 level. But yeah, you see a deterioration in the market. I have no idea where key support is on Dow. 33,700, John, is not 34,000.
Lisa, final word.
Just to say that with respect to oil, there was a development, the whole idea that Iranian talks with Russia were going well to come to some sort of deal so that possibly their oil could come back online. But now it seems that, there's a bit dialing back on that and the price is still down.
It's 67 on Brent, WTI at 64. Coming up, Binky Chowder at Deutsche Bank. The coverage continues on this market as we pull lower just a bit going into the opening bell this Wednesday from New York City. Heard on Bloomberg Radio, seen on Bloomberg TV, alongside Tom Keene, Lisa Abramowicz and Jonathan Ferro. This is Bloomberg Surveillance.
How do markets deal with a pace of growth that was so abnormally strong and is now slowing to something that looks more historically normal?
People, they don't like inflation. This is true, but they will tolerate it.
I think what's more interesting is the broadening of the market.
The fundamentals for most companies have been quite good, but the fundamentals for the reinflation trade have been even better. So everything has risen.
I do worry that after a 2021 boom, we're going to slow perhaps more than people expect next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, us simulcast on radio, on television. A Wednesday different than Tuesday, different than Monday. Well, earnings are the same. Target crushed it. Just did really well. But, John, it's about a bond market sending inflation signals.
American retail looks good, Tom. It looked good in Q1, and the equity market reflected that. Now it's show me Q2, 3, 4, and how long this can last. We've been asking that a million times, and I think there's a message in the price action around some of these earnings. Blowout numbers, you raise the guide, you look at the forward look, it looks decent, and what does the stock do? Trades a bit lower into the close. We saw that from Macy's. You saw that from Home Depot too. I wonder if this move in Target actually holds going into the close later, Tom.
Well, we saw that yesterday with an ebb away as well, and we should mention Telephone with an ebb away as well off the Discovery transaction. John, I want to go to what you saw 40 minutes ago or so, and that was a single headline out of China with clear ramifications that moved markets, including Bitcoin down to recent lows.
Look, clearly not happy with the direction of the commodity market over in China. Things have been absolutely surging. The degree of speculation that underpins that, I think that's open to debate, and clearly not happy about the prospect of people dealing in Bitcoin and not the Chinese currency. So some pushback there as well. The rhetoric's not helpful. The rhetoric wasn't helpful from Elon Musk either. And I keep going back to this. For Bitcoin as an asset class, and like you, Tom, I've been very open about what I don't know about this asset class and my willingness to learn more about it on the way up and on the way down. But I do think even for the bulls out there, it really undermines the asset class that one single individual who happens to be a Tesla CEO was able to move this market as much as it did through the weekend and into Monday.
Yeah, Lisa, what I'm really interested in is well here, the Bitcoin and Musk thing. We'll continue that dialogue. Thanks to Mike McGlone for coming on short notice with us in the last hour. Lisa, my inkling here is retail's got to reload in the bond market like Amazon did the other day. I mean, they did 80 billion or whatever the number was. Retail's just got to take advantage of this opportunity.
Well, and perhaps that they will to basically bulk up in terms of their inventories to get ahead of some of these supply chain disruptions. I mean, in order to finance some also expansion in the e-commerce side. Look, we're seeing a lot of companies come to the bond market. We're seeing easy financing conditions, but you are starting to see certain investors move away from wanting to buy credit. They are seeing the peak in terms of valuations, given the inflation expectation and given the fact that people believe we are moving to mid-cycle, and this may be the predominant theme that's driving some of the weakness that we're seeing, and frankly, the response to blowout earnings. Tom.
So to look at the spread market, IG and high yield, what is the full faith and credit yield you're focused on, Lisa? John's focused on 174. What are you focused on?
Right now, I was looking at the fact that the spreads, that basically the extra yield that you earn to own investment grade credit in the United States, fell to the lowest in post-crisis history earlier this week. It has risen a little bit, but if you take a look at the highest rated debt, it is actually doing better right now than certain slices of lower rated debt.
And then the other dynamics, folks, before we get to a wonderful equity guest here, John Farrell, the German 10-year yield speaks volumes. That shift from a negative yield possibly to a positive yield, that changed the dialogue for an ECB meeting.
Yeah, bond market gets the headlines, but keep an eye on Italy. It's 7 straight days now.
Explain that.
Yields climbing. That's the periphery. I don't think that's what the ECB wants to see this early in this recovery. And Lisa mentioned the credit market, something we were discussing on Monday, and the team here at Bloomberg put the numbers together. Look at what's come to market this year and look at how it's performed since. In the primary market, for the new issues, non-financial in Europe, in the primary market, investment grade, 80% of it is now trading below its issue price. Tom, there's a signal in that, and I think it speaks to the dynamic Lisa's discussing more broadly.
Yeah, the signal here is real simple, folks. There's something about inverse, like yield up, I think. Lisa, am I right? Price goes down.
That's how it works, TK.
Well
I nailed
done.
that?
Nailed
you.
it.
We can move forward. I'm going to look at the equity market. Futures negative 40. Killed it. Futures negative 41. The VIX doesn't tell me much. At 23 level. The Dow Jones Industrial Average under 34,000. John, the Dow crushed.
Thank you, TK. Yields up by 2 basis points to 165.57. When we discussed retail this morning.
166.
166. When we discussed retail this morning, we're talking about the retailers. I think we need to talk about retail trading, Tom. Big part of this move higher. Really led the way in many ways, getting on board the cyclical trade before many institutional investors did too. And it hasn't been lost on people that volumes have really dropped off in America over the last several months. And I wonder what the retail trader, retail investment aspect of all this actually is, the lack of participation and how things are set up at the moment, TK.
We will have to see. Right now, two important guests. We'll get to the earnings chat in a moment. Bikram Chadha is with Deutsche Bank. To say he's their chief global strategist doesn't describe the acuteness, the detail of his equity strategy notes. They are literally legendary. Binky Chadha, wonderful to have you with us. What in your notes is the most important statistical dynamic right now? What's the thing moving in the markets that catches your attention?
Good morning, Tom. So I would say, I think as we are all sort of cognizant of, there's a very large number of moving parts right now. What I would basically emphasize as being most important for the equity markets is really, what typically happens at this stage in the cycle, which is a peak in growth. So we're talking about rates of change, not talking about, growth not remaining robust, but it's really a peak in growth, and that I would identify with, a peak in the manufacturing ISMs. That's historically happened typically about a year into the recovery, and it's typically been associated with, a significant consolidation basically in the markets, a pullback of 6 to 10%, and that's our key view here. There are of course earnings, the inflation risk, what's been happening with the retail investor, as John was saying. So there's a number of things going on, but I would argue, most important is sort of the peak in growth. That's the first sort of challenge for the, this steep and sharp and very, very fast recovery in the equity markets that we've had since March.
Pinky, you're focused on momentum and not levels, and it's an important distinction for anyone in the market. Economists might be focused on the latter, you're focused on the former. And Pinky, when you look at the market at the moment, I do wonder whether we've also seen peak inflation expectations then. That's something HSBC has just thrown into the mix in the last couple of days. If that's the case, you should be fading the cyclicals here pretty hard. Now, Pinky, I'm wondering if you think that's the case.
So 2 points. Number one is basically, are we at peak inflation expectations? And there's a number of things to sort of think about here. If you just look at, what seems to be the most popular measure or easy to get and look at, which is basically break-even inflation rates, they would tell you the 10-year break-even inflation rate that there's probably a little bit more to go. Basically, if you're looking, over the, back up to the late 90s. But we don't have a good read of what it looked like, prior to that, and especially in the 1970s. And that really is the concern and the risk that the market is concerned about here, or at least, should be concerned about, not just going back to sort of, pre-financial crisis, but, late 60s and early 70s inflation spiral. That's really the concern here.
Binky, can you build on that? Because this is the consensus increasingly across Wall Street, that much higher inflation than we've been used to over the past few decades is the bigger risk for markets than disinflationary trends, as the Fed sees as the biggest risk. Why is that the case? Why do you think this time is different than the past several decades where we have not seen this dynamic?
Sure. So here, I would sort of distinguish between sort of the medium-term perspective, which is higher inflation means higher bond yields. It means lower equity multiples or lower earnings yields. That's sort of a medium-term issue. What I would argue is that, the near-term issue over the next 3 to 4 to 6 months is really the fact that we've never had a situation historically where the Fed has not begun to normalize rates and there's an inflation concern in the markets. Inflation concerns typically happen very late in the cycle. And so, if the inflation risk actually materializes in terms of being persistent, we're sort of going, this COVID speed cycle is sort of going, right through early, middle, late, and approaching sort of the end cycle. But the biggest risk to the markets comes from the simple fact that, whenever monetary policy, whenever the Fed has responded to inflation risks in the late cycle, more often than not, it ended up basically in a recession, because when they tighten, it takes a while for it to have an impact, and it's always uncertain as to, whether or not it's having an impact, and so it's essentially over-adjusted, and that's exactly the same concern. It's just very unusual that it's happening at what is still an early stage of the cycle rather than later on in the cycle.
And this
and
is
so
the
the market
challenge.
can well move to pricing in, the end of the cycle, which is worth 20 or 25% down in the equity market.
You've got the business cycle and the investment cycle. Binky, it's good to catch up. Binky Chadha, Deutsche Bank Chief Global Strategist, looking for 4,100 year-end on the S&P 500. Right now, 40.84 on the S&P, down about 0.9%, Tom. We're declining about 38, 39 points on the S&P 500.
Interesting, the tensions out there on inflation, which directly link into nominal GDP and the retail call we're seeing. John, TJX may not be familiar to our global audience. Good morning, Framingham, Massachusetts, outside Boston, where they invented this. And John, it's off-price retailing, which comes in a number of flavors, TJX, Marshalls, and the rest. We're focused on Apple, Amazon, Alphabet. TJX is made 19.9% per year for the last 10 years.
We call it TK Maxx in the UK, Tom. TK
You have
Maxx.
TJX, and I did
but
not
we
know
call
that.
it TK Maxx. I'm not sure why. Not sure why we replaced the J.
I just think it's
there
great.
There you go. You ever been? Nope.
TJX.
Tom Keene and Lisa
didn't even
Abramowicz,
have
Jonathan
to
Ferro.
ask.
I have. I'm sure Lisa has too. Coming up,
course I
8:30
have.
a.m. Michael Shaw, Market Field Asset Management. Your face, TK. I want to
Can
frame
you imagine when we're all in the
That is
same room together?
perfect.
It's just going to be a love fest.
This is Bloomberg.
With the first word news, I'm Rishka Gupta. Governments in the European Union have formally agreed to allow quarantine-free travel for vaccinated visitors to the bloc. Authorities will draw up a list of approved vaccination certificates issued by non-EU countries. Those countries also will have to be deemed to present a low risk of spreading the coronavirus. The US is very likely to make it on the approved list. Target's first quarter sales blew past Wall Street expectations. Comparable sales rose almost 23%. That was more than twice what analysts had forecast. Target says it expects wider margins for 2021 than it had foreseen just earlier this year. And the Bitcoin rally, fueled by Elon Musk, has collapsed. The world's largest cryptocurrency fell below $38,000 at one point today. That wipes out all the gains it made since February the 8th. That was when Tesla announced it would use corporate cash to buy Bitcoin and would accept it as a form of payment for its vehicles. Now Musk says Tesla won't accept the digital coin. And Israeli airstrikes battered the Hamas-ruled Gaza Strip today, and Palestinian militants fired rockets into Israel again. All this happened whilst there was talk of a possible ceasefire. Israeli news media reported that Egypt had proposed a truce that would start on Thursday and that Hamas had agreed to comply. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The president is concerned that China is far ahead of us in the electric vehicle market, and instead of producing the technologies of the future, we're importing them from somewhere else. It is time for that to shift around.
That was Gina McCarthy there, White House National Climate Advisor from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Your opening bell an hour and 12 minutes away, and your equity market is heading south. We're down 39 on the S&P and off by almost 1 full percentage point, 40.83 on the S&P 500. In the bond market, yields are higher by a couple of basis points, not helping things. Pretty toxic out there, 165.40. In the FX market, euro dollar just an inch higher, euro dollar 122.15. The euro just a little bit weaker, the dollar just a little bit stronger. Crude 64.16, Tom, and Bitcoin hammered.
I'm going to call it an inflation reset. Bitcoin hammered with a little bit of a bounce. Now, we'll get to that in a moment. We ignored lows here earlier. My fault. LOW. And what really caught me, I just want to mention one thing. They plan a $9 billion in share repurchases.
Yep.
Again, that use of cash idea coming up big here. The use of cash in Washington is there's a lot of it. and we need a plan to spend it. Benjamin Bain joins us, Bloomberg News chief fiscal reporter here this morning. Ben, what's the mood to get through this week on negotiation, on spending all that money? What is going to be accomplished to Friday, or frankly, what's going to be accomplished to the Sunday talk shows?
Well, I mean, this is kind of really heating up right now. We're really seeing the debate kind of reach a point here where both sides say they want to get something done. Both sides say they want to move. They want to find a place where they can basically agree to the whole infrastructure question we've been talking about for weeks, really months down here in Washington. And now we're at a point where everyone's focused on, so where's all this money going to go? How is all this money is going to be spent? And that's really the debate right now, because once you frame that, right, I think we're going to see where this actually comes down and who can actually be brought on board.
Ben, the cliche is a bridge to nowhere, and there's all sorts of stories in the history, whether it's Japan or the United States, whatever. Is this simply that, or is it just earmarks for social infrastructure and traditional infrastructure? Is it more a legislative debate, or is it I need a bridge?
Well, I think it's both. I mean, we've seen over the last several weeks in this country breakdowns of basic infrastructure. But we've also seen problems as people are trying to get back to work, issues with finding childcare. And Democrats will say that is an issue that needs to be addressed immediately, and that's part of the social infrastructure that you're mentioning, Tom. So really the question is, how do you kind of draw that line? And that is ultimately going to be the debate. There were some promising signs even over the past 24 hours. There was a meeting with the White House and some top Republicans. And essentially, the message coming out was there may be some room to reach a deal here. Whether we're going to see some of that social infrastructure make their way in there, or some of the things that Republicans want, some of the projects, that's going to ultimately be the question where that line is drawn. But both sides really seem to want something done here, and it seems like their constituents want something done because, look, they're living in districts where bridges are not working. They're living in places where they need new highways. So there's pressure.
Ben, there's a question from the market's perspective. How exactly will this be financed? Mark McCormick yesterday of TD Securities saying that America's infrastructure plan perhaps wasn't going to have the same kind of effects on generating growth as perhaps even the German plan, because so much of it might be financed by tax hikes. Do we have a sense of if that really is the major source of financing that's likely at this point?
I don't think we've yet gotten there. We've heard that from the Biden administration that the one bright line is that they don't want to raise taxes on people earning less than $400,000 per year. That's essentially the one bright line. Beyond that, in terms of where the taxes are ultimately going to come down from the White House's side, from President Biden, we don't yet have that clear, how much they're willing to negotiate in terms of that corporate tax rate and the other tax rates. We have an indication that they are maybe willing to come down from that initial foray. You have Senator Joe Manchin from West Virginia saying he would like to see something lower than the president was initially proposing. So there may be some wiggle room. We don't yet know where that's going to come down, but it still seems like both sides are at the table. Both sides seem to be kind of willing to get somewhere.
Ben, in the meantime, we are evidently not completely done with the pandemic, despite the fact that New York City is reopening and the fact that people are going back to offices, and that here in New York, we no longer have to wear masks if we're fully vaccinated. That, according to new guidelines that are being misinterpreted, according to Tony Fauci. There is a question that I have to you in terms of the U.S. distribution of vaccine overseas, how that's being received, and whether some people are arguing that perhaps the U.S. hasn't been aggressive enough and has allowed the likes of China to take the upper hand when it comes to international intervention here.
Yeah, Lisa, I think that's absolutely right. This is, some have coined it vaccine diplomacy. And there's an argument that the U.S. got a bit of a late start in terms of the global effort. That's because, of course, here in the U.S., there's been this push to put all of the vaccines that were produced domestically that the government has in its stockpiles to work in the United States. Right now, what you see is the U.S. is really ramping up that effort. But there is a sense among some, and some have criticized the U.S. for not moving quicker to get vaccines to places like India or Brazil. Mexico's gotten some, Canada's gotten some, but the situation, just south of the U.S. border in Mexico is pretty dire. So there's a situation where the U.S. is now starting to ramp that up. There's a sense that if we have 60% of people with one shot, maybe here in the U.S. we've reached a certain breaking point.
Ben, just quickly, the president goes to Europe next month. The airlines want him to open the travel up. The Europeans are suggesting this morning, at least in several reports, that that's going to happen soon. Will the U.S. reciprocate if the Europeans open the door? What on earth is going on with this?
Well, that's going to be, I think, the hot button issue we're going to have to watch over the next month. Remember, Jonathan, we're seeing, this is summer travel season about to start, right? This is the time when everyone's been just waiting to get on that flight to go to Europe to see their family maybe they haven't seen. So there's a lot of pent up demand there. I think there's going to be pressure for the U.S. to do something. That's going to have to be a decision. I think we're going to have to see how that works into the broader scheme of things. How we see how this new mask guidance actually plays out, I think, is going to play a big role too.
Ben Bain, down in D.C. Thank you, sir. TK, just as JetBlue comes out and gives us a date. August 11th, to travel non-stop from JFK to London Heathrow. That transatlantic route has got to open up big time for them to have some success.
Well, yeah, they're gonna do it. But John, don't they need the government support here? And isn't that lacking right now?
Absolutely, and we don't have that at all. The Europeans say, okay, if you're vaccinated, you can come in. If that goes forward, great. I want to get back. Well, and if you're not a US citizen, and if you don't have permanent residency, you can't travel directly from Europe to here at the moment.
I go to the BA executive that I saw maybe in the FT, I'll say maybe the Telegraph, who just claimed immediate urgency to get this fixed.
We've been vaccinated.
I don't know. I mean, I got hundreds of emails today. Why isn't Lisa sitting between the two of you, keeping this love fest going?
You want to try and make that happen soon, do you?
I don't know. I'm watching BitDog, 38,313. I think we had a 35,000 print. It's a bounce, but it's not an elegant chart. Well, we are riveted at this, Lisa. Prada's like looking at the Jimmy Page Telecaster, the biggest amount of mail we got today. Well, I know he played a Les Paul.
Right. Carry on.
This is like 3 separate shows.
All directed by Tom at the same time.
So 3 different shows. Well, there's 3 shows in his head.
There's a sign over there. It says, don't play Stairway to Heaven.
2 shows out here in 2 different studios.
John, look at that.
I have no idea what's going on.
On radio, it's a gorgeous Telecaster.
Thanks, TK.
It's in white. It says Prada on it.
Yeah. About 60 minutes away from the opening bell in New York. Good morning to you all, live on TV and radio alongside Tom Keene, who's doing his own programme somewhere else with Lisa Abramowicz. I'm Jonathan Ferro. You reckon
why would you ever
down
think
42
that?
On the S&P? You're in a different room, but no idea why. Down 1% on the S&P 500. In the bond market, yields are higher by 2 basis points, 165.74 on 10s. In the commodity market, we're down 1.8% on WTI, 64.26. Did you wear a mask in the building today, TK?
No, I came in.
Did not. I was
talked to, seriously, folks, we have a phenomenal security operation
Fully
here.
vaccinated and mask-free.
We're honored by that. And they briefed me this morning, and they said, you want to go maskless? I said, okay. It was strange.
Next step is we get in the same room, right?
Yeah, we're like
Maybe.
there. I think.
Don't you feel kind of naked when you take the mask off?
Naked?
Yeah, I do. Yeah,
I honestly, I do, and I think it's hard to recognize people in the same kind of way. I kind of forgot what people look like without them.
Yeah, I don't think it's a funny or light thing. I think this whole laughing at people nervous thing is just off the mark.
I'm not laughing at people nervous, but the idea of feeling naked without a mask, I mean, I don't feel that way at all. I think we should be patient with everybody. They work it out on their own terms. You've got a choice.
Okay.
It's good. You've got a choice. In America right now, you have a choice that many other countries don't have. If you want to get a vaccine, for most people in this country, and there are still some access issues in various places, but for most people in this country right now, if you want a vaccine, you can walk in and get one. That's a choice. And after that, if you want to take your mask off, you can take it off. That's a choice.
Yeah, I think it's a choice.
But it's nice to have that choice back, Tom, instead of being told what to do all the time, which is where we've been at for the last 12 months.
Well, we've been there, and I thought Amish Adalja yesterday was brilliant. His essay for The Hill.
Some real pushback.
He was scathing. He was really, this guy's a grizzled pro.
Yeah, and we're starting to see some division in the medical community. Let's be clear about all of that, Tom. We've said repeatedly on this program, leave the science to the scientists. Okay. Well, the doctors, there's some division emerging here. They want to move quicker, start treating this like the flu. That was the message from Dr. Adalja from Johns Hopkins yesterday.
Well, let's get to something serious here. We got to get to the markets here. Moving on, futures negative 44, and there's some interesting dynamics here on the inflation fears that are out there. We're going to do that. John's going to lead that off, but I've got to greet Michael Shaul and say good morning with Market Field Asset Management. And Michael, we've had more emails on your love of Nutella than anything else. Now, we had in America in the 1960s. In 1960s, Michael, we had Tang and Sanka, where in Europe they had Nutella, and that speaks volumes about the transatlantic divide that's there at each and every moment.
Well, I grew up in England as a kid with Lyle's golden syrup, which I continue to give to my children today. We didn't have Nutella in England.
I mean, John, they didn't have Nutella in England, but at the same time, John Farrell, that transatlantic divide is there is measured by Tang and Nutella.
I had golden syrup too. Michael, I'm surprised you're giving that to your kids, though. I think we should probably move on and talk about this market.
Let's move on to transatlantic divide.
I'm getting as to what I give my kids for breakfast. Carry on, John.
I know what you give them. Eggos and Nutella. The stuff that goes, the waffle things that go in the toaster, and
maybe
you put some Nutella on top.
Excuse me, John, those waffle things, John, those waffle things are frightened words. Those waffle things are Eggos, okay?
I said Eggos with Nutella on, and then I called the Eggos the waffle things, just in case anyone in Europe might think they were actually eggs.
How about those markets, John?
Those markets? We're defensive this morning, Michael. Michael, just quickly, your take on the price action this morning. Yields higher, everything else lower. Crude, euro, equities. Your take this morning, please.
I think we're in a bit of a corrective phase. I mean, it's obviously centered around, the sort of, what we call HOPE, which stands for highly optimistic projected earnings. That sort of part of technology that everybody's sort of been, banking on so furiously. I think that really is in what I would call a major correction at this point. And I think the overall market, is responding to that. And I think this is typical in a major transition of leadership, which is, I think, away from technology and towards cyclicality. So, we'll have periods when everything kind of goes up and periods when tech and the sort of hope stuff leads us lower. And, we're in the latter right now.
Why do you think that transition, though, persists, Michael? That transition from leadership, from the growth names, big tech, towards the more cyclical parts of this market?
Because I think the global economy post-pandemic is radically different to the global economy pre-pandemic. And some of that is the direct effect of the disease. And some of it is the radical change in fiscal and monetary policy globally. I mean, we're really not looking at the same set of circumstances in May 2021 that we were in January 2020. And I think the market is slowly starting, to look at that. So, I mean, one example of how things have changed is, we have CPI over 4% right now. If you look at that another way, any price earnings above 25 means that the earnings yield of that company is no longer keeping up with inflation. Pre-pandemic, with CPI in the mid ones, everything in the S&P had a comfortable real earnings yield. So we have a very different set of both market and monetary circumstances and economic circumstances right now.
When we talk about the market influences, I want to talk about the risk that has been introduced by Bitcoin. Yes, we do have Bitcoin down significantly, and people are talking about how that's indicative of a risk-off move. And yet, I've been looking this morning at PayPal, MasterCard, Tesla, Square, some pretty big companies that have significant Bitcoin exposure. And I'm wondering, at what point does a real drawdown in Bitcoin become something more systemic that a portfolio manager invested in U.S. equities has to pay attention to?
There is some crossover. I mean, 3 years ago when Bitcoin blew up, it really didn't matter. But right now, there is some real institutional money and some real wealth management money in Bitcoin. And of course, there's a significant amount of market cap. But as I said, I think the hope trade, which covers things like Tesla, is already in a significant correction. And I think these stocks still have much further to fall over a period of time. And I think it does have the potential to have sort of waves of panic attached to it. But I don't think it's going to undermine the cyclical forces which are also in place at this point in time. So if I look ahead several months, I think there's quite a lot of cyclical equities in the US and global indexes like Australia and the UK, which are very cyclically focused, which I think can be significantly higher. And there's scope for significantly lower prices in a lot of the high multiple portions of the US and global equity market.
What is the profile of a panic in markets right now at a time when the Fed is keeping policies very easy and at a time of such incredible growth in earnings?
Well, it's a significant drawdown in prices, and it has been a fairly severe correction so far in these high multiple names. The good thing is you're losing money you only just made. So a lot of this stuff is still higher than it was towards the end of the fourth quarter 2020, but the declines from their 2021 high is significant. There's a lot of stuff down 30% plus. In a couple of months, which by any definition is a severe correction. No, it's too early to say what the end of today looks like, but the S&P responding by going down 1.5%, 2%. There's a degree of panic in the market at that point.
Michael, what's the opportunity in equities when you look at sectors and the different factors that are out there between small cap, mid cap, international, and a beleaguered EM? Where's the opportunity?
Well, as I said, I think in the cyclical parts, and EM is a good example. I don't like the MSCI Emerging Market Index as a place to put money, but the reason is because it's now dominated by Asian technology companies, which is not really what I want to own right now. But some of the cyclical emerging market indexes still look just fine. Brazil looks cheap. Mexico looks fine. Russia looks fine. They just don't have a lot of market cap as far as the overall index is concerned. You could say the same about the S&P. I don't think it's the best benchmark to be in, but the cyclical portions of it, energy, materials, some of the financials, I think look just fine. And globally, I think the two developed markets that really stand out are the UK and Australia, simply because of the makeup of their indexes. The UK gives you a lot of materials and a lot of energy. Australia gives you a lot of financials and a lot of materials. And I think the underlying FX is also going to matter. The Aussie dollar looks very, very cheap versus global commodity prices. And sterling is just coming out of its Brexit funk. I mean, sterling is exactly where it was when the Brexit vote went the wrong way. For most people in June 2016.
Cable 141.56. Michael, thank you, sir. Michael Schauer, Market Field Asset Management CEO. The pound has had a big bounce back. At one point last year, what did we break? 115 or something like that? Do you remember that crazy day back in March, guys?
Well,
when we just broke down big time and the dollar ripped.
Yeah, John, it's really important you bring this up. I calculated, I don't have it in front of me, but I thought I saw 18 or 19 big figures on the euro-yen move. There has been in FX some huge moves coming out of this pandemic.
The closing low, 114.85. It was March 19th of last year. Almost 142 this morning, Lisa.
I'm really trying to understand, though, this dynamism of the U.S. economy and how long it can really lead. And I think that that's been the huge shift. Are we going to see a reversion to the consensus at the end of last year of a weaker dollar? Are we going to see an ongoing feel of that as the rest of the world reopens? Or is there something different this time about the nature of how economies are reopening and the fact that the U.S. is vaccinated so much more quickly than other countries?
And I make fun of it, Lisa, but I think you're really onto something here. And it is off of Rogoff and Reinhardt of over 10 years ago. There's something different. We can make a joke about it and call it the pendulum of something different. But you know what, Lisa? That's the core fear
Lisa's never
that is out there
down,
right now.
She's really not. I think most people assume the consensus view still is dollar weakness
falling
delay.
off your chair?
Yes.
Most people assume dollar weakness delay.
You're falling off your chair at a podium?
Transitory. Carry on,
Grab the podium when you go down.
I've got no idea what's going on this morning. In about 10 minutes, I'll be on my own. BlackRock head of thematic strategy, Kate Moore, will be joining me.
Maybe we'll swing by.
Look forward to that. Lisa, you can. By all means, you have a standing invite to the programme. Kate Moore, and I believe Savita Subramaniam of Bank of America is going to be dropping by too. So nice little lineup to count you down into the opening.
So yeah, I get it, John. It's better than our lineup. Tell that to Michael Schauer.
I love Michael Schauer. Michael was very apologetic that he couldn't make 9:30 today.
So, fell back onto the 8 o'clock hour.
Well done. Well done.
Equity futures down 44. We decline a little more than 1%. The coverage will continue on Bloomberg Radio with Tom Keene, on Bloomberg TV with myself, Jonathan Ferro.
John,
Lisa gets an extra hour to read, and you can tell every morning that she actually read for an extra hour.
Big dog entry point?
If you want it, TK, have a dabble. Have a dabble.
Ask MedBill.
You do what you want. It's about personal choice.
My kids really like Dogecoin. They really
get involved. Have you given them an account yet?
Not yet, but
I
will say.
Are you going to do it this summer?
Maybe, but
summer project.
I mean, honestly, it's because they're into Roblox. I mean, it's just life imitating art.
I think it's very cool. I think it's good for them.
Life. All right.
We're down 13% on Bitcoin, on radio, on TV. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden appears to be boxed in when it comes to the fighting in the Gaza Strip. Right now, he's able to urge a ceasefire rather than taking stronger steps. The problem, the president is wary of applying too much public pressure on Israel, and he has a lack of influence on Hamas. And President Biden is looking to build on a denuclearization agreement Donald Trump reached with North Korea. That's a move likely to be welcomed by South Korea. The 2018 agreement between the former president and North Korea's Kim Jong-un was a bare-bones declaration. It called for the two sides to work towards complete denuclearization of the Korean peninsula. In China, Tesla's sales growth slowed down sharply last month. A little under 12,000 Tesla electric vehicles were registered in China. That's almost two-thirds less than in March, when almost 35,000 were registered. There was an embarrassing protest against Tesla at the Shanghai Auto Show and a run of accidents involving Teslas. And the CEO of Deutsche Bank says the firm must be ready for possible acquisitions once consolidation in European banks picks up. It was the clearest hint yet that Christian Saving is considering deals again. Halfway through his 4-year turnaround program, Saving says that European bank consolidation will happen sooner or later. And JetBlue plans to start its long-awaited flights between New York and London this August. The airline is jumping into a pandemic-battered market that remains largely shut down. Fares for US-based travelers start at $599 round-trip in coach and $1,979 for premium seats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
I think most Asians have this sense of otherness, and of course I felt that, especially here on the mainland U.S. I mean, I've had people, Americans, come up to me and say things to me like, where are you really from? Even while I was wearing our nation's uniform with the American flag on my shoulder and U.S. Army on my chest. Over my heart.
The Lieutenant Colonel from Illinois, an important interview. David Rubenstein with another wonderful and important peer-to-peer conversation. Look for that at 9 p.m. tonight. And Mr. Rubenstein joins us right now on Tammy Duckworth. She is a politician, but far, far more than that. It's an exceptional story, David Rubenstein, from the Singapore school, the Bangkok school, a father that moved around, and really there were some tough times to her war duty. What did she say to you about the war duty and where she is now in 2021?
Well, she's, of course, now a United States senator. She was considered by President Biden to be his vice presidential choice, and she came from very far away from that kind of life. She grew up with a fair amount of poverty in Thailand, then in Hawaii, and then ultimately decided to become a helicopter pilot. And for the Illinois National Guard, she went over to Iraq, and tragically, she lost her legs in a helicopter accident. And as a result, she had to rebuild her life. But since that time, she was elected to Congress, served in the Obama administration, and has mothered 2 children.
David, the immediate point is Asia Americans and how they relate to the rest of this country. She has a unique and important perspective. What did she say about anti-Asian comments?
Well, she thinks that despite the fact that she's a United States senator and gave large part of her body to the United States government, in effect, through the tragic accident that occurred while she was fighting on our behalf, she's still discriminated against. Clearly, she's in a different position than she was when she was younger, but she still thinks that discrimination against Asian Americans is fairly evident across the country and getting worse, and she's trying to fight it.
You know, one thing that's so great about your interviews is you always get to the human side of people who are in places of high power. And I'm wondering if you can give a sense of how some of these images, of some of these consequences, Asian American discrimination, and some of the social changes that have come from the pandemic have colored her views when it comes to pushing certain parts of the Biden administration's agenda.
There's no doubt that the recent pandemic has focused more attention on Asians. Many people in the United States think that everybody from Asia is from China, in effect, and they're while they may be upset about China, they take it out against all Asians, and they shouldn't be taking it out against anybody, really, because nobody in the United States really had anything to do with that who was an Asian American or Asian. But anyway, that's the way the life has evolved, sadly. I do think that she is determined to do more about it and try to do what she can as a United States senator. But the most important thing is, to me, that for all the things that she's had to go through, she doesn't seem to have any bitterness. You know, she lost her legs in an accident where she didn't have to go on that mission. She didn't have to go to Iraq. She volunteered. She didn't have to go on that mission where the helicopter crashed. She volunteered. And she basically put her life back together again. She and her husband had 2 children subsequent to that. She got elected to Congress. And she's relatively cheerful. I don't see how anybody could be that cheerful given what she's been through. But she doesn't really, have a bitterness that I would have thought she would have had. It's a compelling story.
Yeah, it definitely is. And the other thing that she has happiness, even as she juggles a pretty big workload and a pretty big home load. And she talked a little bit about how it is challenging to go back and forth within both of those. And it does speak to the Biden administration's plan for child tax credits and for other areas to help families. Can you give us a sense of how much mainstream support she sees this having versus some of the pushback where people are saying, stop trying to shoehorn in certain agendas into this broader issue that we have right now of fighting and emerging from the pandemic?
Well, there's no doubt that the pandemic has been the main focus of members of Congress for a while. But I think now people are beginning to look at other issues, and clearly the tax issues and the infrastructure issues are things she's worried about and working on. But I think she has a unique voice. She's one of the few people who've served in Congress with these kind of tragic accidents that she's gone through. And she's living a full life now. She's got 2 young children. She's married. She's got responsibilities back in Illinois. She juggles all that and does it pretty well, I would say. And it's really an inspirational story about how somebody can come from very, very modest circumstances, rise up in our country, have great sacrifices to the country, and not be bitter about what happened to her. And now she's serving the country. So it's a great human dimension story. And she wrote a great book about it, which I talked to her about in the interview.
David, one final question. What did she say about the future of her Democratic Party? When you're from Illinois, it's a certain Democratic politics. What did she say nationally about the Democrats to 2022?
We didn't really get into that. My guess is that she's from a state that's pretty Democratic, and I think she reflects the mainstream of that Democratic thought. But I think she feels that better bipartisan cooperation in Congress would be a good thing. She's trying to bring that about, but it's not easy to do. She is working across the aisles on certain things she cares about, and I do think she's a great symbol for that kind of cooperation.
David, thank you for the time. David Rubenstein, a Carlyle Group co-founder, and of course the interview with Mr. Rubenstein, the senator from Illinois, Tammy Duckworth, tonight at 9 p.m. David Rubenstein, peer-to-peer conversations as well. Lisa, Lisa, I'm sorry, I was dealing here with some Nutella mail that we got, and I look over, and Bitcoin's not under 36,000. It's just now going to breach a 33,000 handle.
Yeah, and you can see a real deterioration across the indexes, and particularly led by the NASDAQ. And I do wonder, yes, Bitcoin is perhaps indicative of a risk-off field that we see across markets. I do wonder, though, about whether it itself becomes a bit of a systemic risk. And I don't mean in terms of collapsing the system in any way, shape, or form. So not to exaggerate this, but the idea that a lot of big companies have invested heavily in Bitcoin, that semiconductor producers, basically have benefited from the crypto asset surge. How much of this will be reflected in some of the risk-off field?
Across all of the Bloomberg world, folks, we will keep you abreast of this with Bloomberg Technology, what Joe Weisenthal's doing in the afternoon as well. This is a Bitcoin in retreat and now, frankly, plunging. I'm going to, Lisa, break protocol here and type while we're on screen. XBT
Why not?
currency.
Please go ahead.
Mike probably's going to email in and say, what's the function? XBT currency, and it is in free fall. We'll look for news flow into the 9 o'clock hour while we get a plunge now down over $4,000. Those are dollars, not index points, in minutes.
Do you remember when people were saying that a lot of institutions felt like they had to invest in Bitcoin, that everybody had to have a slice if they wanted to reflect markets. I wonder how much you have an immediate reversal, given some of the volatility on not very much news, the idea that there could just be such a trigger and bam, it gets absolutely deflated.
I just did on the Bloomberg terminal the TE function, folks, a trading envelope, which is a fitted standard deviation study, and Bitcoin is spot on, a 3 standard deviation move on a daily chart. That's not a crisis move, but that's a big move. No other way to put it there. Thanks for getting that chart up, Riley. You just killed on getting that chart. On radio, all you need to know, Bitcoin south. We'll have much more on this. Paul Sweeney and I will continue this discussion in a moment. From the Council on Foreign Relations, Richard Haas, later this morning. Stay with us on radio, on television. This is Bloomberg.